Sales for its cloud computing unit Tesla earnings are out tonight. Sources say the US and Germany are set to send tanks to Ukraine in a move set to prevent a fracture to Allied unity. And activist investor Hindenburg Research accuses Adani Group companies of accounting fraud. The Indian conglomerate says it will respond shortly to the allegations. Let's take a look at the futures then. And when it comes to such a big week for tech earnings, the concern had always been that the cuts in jobs were flagging slowing demand. And indeed, that was what we heard from executives at Microsoft in terms of its cloud division business, Azure, and what they expect to see softening demand for that important, crucial part of the Microsoft business. That has led to broader risk-off sentiment across these markets. The FTSE 100 currently range-bound. Interesting, of course, in terms of the repricing of Bank of England rate hikes, given the data we've seen after the last few days out of the UK. Bloomberg Economics now sees 50 basis points at the next meeting, followed by 25 basis points from the Bank of England. The tussle, of course, between officials of the ECB, the rhetoric around how fast and how high to go on rates continues. The Spanish IBEX currently down 0.1%. Over in France, the CAC current is up 0.1%. So yes, the sentiment around technology. Interesting to hear from Jeremy Grantham, the famed strategist, and yes, Bear, saying that the S&P stateside could be looking at further losses and further downside of around 17%. Let's switch it on, see how things are shaping up and shaking out. Cross asset then. Futures in the US pointing lower by 0.5%. That is tying to that Microsoft story. And then, of course, the importance of Tesla and their earnings later today. We had ASML earnings here in Europe coming out slightly stronger than estimates, and we can break that story down for you in more detail in the show. Aussie dollar was bid, currently gaining 0.7%. That's the highest level for Aussie dollar since around August of last year. That's after CPI inflation came out in Australia at a 32-year high and ramped up expectations of another rate hike from the RBA, 25 basis points at their next meeting. Bitcoin looking set to post 2 straight days of losses, the first 2 straight days of losses since the start of the year. In the last 30 days, it's had a pretty strong run-up, the largest cryptocurrency, 22,728, just down 0.8%, tying into that risk-off sentiment and the Microsoft story. And here's the Adani Enterprises then, a hit of 1.7% on the back of that note, the short position taken by Hindenburg Research, claims of fraud. Again, we are going to hear from Adani Enterprises. These are allegations at this stage, and they will be putting out a response in the near term. Let's get over now to Bloomberg's markets reporter, Valerie Teitel. Now, Valerie, you've been looking at peak inflation, what it means for volatility and risk positioning.
Yes, that's right, Tom. I really want to zero in on this chart here, which is showing implied volatility in the Treasury market and in the FX market. Now, the Treasury market is this line here in blue, and both these lines you can see we're still elevated versus pre-COVID levels, but it has declined. And what's really spurred that decline was that peak inflation print back in November when it became clear that in the US we might be past the peak of inflation. So volatility has declined. And what's important about this is a lot of asset managers, a lot of Wall Street banks use a measure of realized volatility in their value at risk models, in their VAR models. So if we're sure that inflation has peaked and hence volatility has peaked, that means when every day when these asset managers come into the office and refresh these VAR models, their value at risk has gone down, which will push them further and further out the risk curve into riskier assets like EM bonds, EMFX, because now it's quite certain that that treasuries, which last year really did not behave like a safe haven asset, they could still see further declines in volatility, regain the safe haven asset status, leading investors to spur this risk-on move that we have seen this year further out into the second quarter of 2023.
Okay, Valerie Teitel with a great chart there on falling volatility and what that may mean in terms of pushing investors further out on the risk spectrum. Now, there is, of course, a lot to digest across these markets this morning, including the tech sector, where, as we mentioned, Microsoft shares swung into the red in late trading after it said that revenue growth in its cloud computing business will ease. The company also warned of a further slowdown in corporate software sales. And on the economic front, again, as I touched on, Australian inflation accelerated the fastest pace in 32 years in the last quarter of 2022, prompting bets for an interest rate hike from the RBA at the next meeting. Joining us now, I'm very pleased to say, is Niall O'Sullivan, Neuberger Berman CIO for Multi-Asset Strategies EMEA, and of course, Christina Kino, Managing Editor for Bloomberg City Latest, the blog, and across all things markets. Christine, let's bring you in at this point then, and let's start with the tech story, Microsoft. This had been the concern. We've been weighing up the cuts to jobs, the cost cutting, which some investors saw as a positive, versus the risks around a fall off in demand, and that seems to be what is transpiring for Microsoft. The broader implications for the tech sector then?
Absolutely, Tom. I think really the big read across here is the fact that Microsoft's warning that corporate sales is bound to slow, and that gels with a lot of what we're seeing in the tech sector particularly, right? That cost-cutting drive that we're seeing in mass layoffs and now just feeding into just demand for services in this sector. And so that really makes a lot of sense when you're thinking about companies that are gearing up for a very, very challenging, potentially recessionary environment. They're really trying to get their ducks in a row now and trying to cut corners where they can. And that really is, I think, the strongest and most important read across that we can get from these Microsoft results.
Niall, do you want how much read across? How much do you want to draw out of the Microsoft earnings for the broader tech sector? Is this a reminder? Is this evidence that we are facing an earnings recession this year?
I think it's certainly evidence that we're looking at slowdown, and certainly in the areas where consumer or discretionary spend is greatest. But actually, I think, and we'll talk about this, both stories are quite interesting. The previous story about risk returning, which is telling one side of things, and this story about earnings that is telling another side of things. And in many ways, I think what's driving the markets at the moment are a lot of contradictions like that, coming from top down, bottom up, and meeting each other.
Okay, so those contradictions are at play. Christine, when it comes to the central bank action, and Valerie was talking about expectations amongst some in the markets that maybe we've seen a peak in inflation, and maybe we're starting to see a pause being considered by some of these central banks. But then the RBA, at least Australia, reminded the stickiness of inflation at 32-year highs. Again, talk to us. Is this an idiosyncratic story for Australia? Is it a lag when it comes to some of this data? Or is there a broader lesson here from central banks? How much will this be digested by the hawks at the ECB, for example?
I would say Australia is a particularly useful bellwether, Tom, and so it is quite worrying that we're seeing inflation again at these levels. I mean, remember, Australia is quite a small, open economy. It's very vulnerable to kind of the cross currents that we're seeing both from China, from the US, and really just the global economy. And so the fact that we're seeing again this resurgence in inflation, especially after we've gotten an indication from the RBA that, oh, maybe they're going to start thinking at least about a slowdown in that tightening process, if not a complete pivot to rate cuts, for instance. That really just pours cold water over that whole notion, right? It is very much a warning to markets and investors across the world. If you're thinking about betting on a soft landing and this idea that we could perhaps avoid quite the slowdown, what we're seeing in Australia is quite the warning.
Niall, what do the markets need to see to actually listen, to stand up and take note of what the central bank officials are telling us about the trajectory of rate hikes and higher for longer, as you say?
So I think, and that's been our core belief for a while, we think that rates are going to stay higher for longer. Not necessarily that the terminal rate will be much higher, but that they'll keep at it. And maybe to frame the question to build on the point that was raised, I was reading yesterday that over the last 40, 50 years, looking at 16 OECD economies, anytime inflation has gone above 8, how long does it take to get it back below 3? And the average, or the median, is about 10 years.
Wow.
So in terms of what people are looking at here, they really are hoping for an event. You could describe it as the triumph of hope over experience in terms of what's going to happen. But the problem is the point that your previous contributor made, that there has been a real return of risk-on sentiment, particularly in the bond markets. Bond markets now have attractive returns they did not have before. It was obviously a very difficult year last year. Capital is flowing. But very important, as she said, volatility has fallen, which means people can take bigger positions, and in their VAR models, their risk models, they look to be the same amount of risk. And that is enabling more capital to come in. So you're seeing a real push-pull between what the markets want to believe and deploy capital versus what the central banks are clearly trying to tell them. And I think what will happen over time is the inflation data is going to prove more sticky than people think, and that will be the thing that changes behavior.
And what will you need to see to want to ramp up your risk exposure? Will it be a pause or a cut? What are you looking for? What is the trigger?
I think at the moment what you're looking for is, so we have been overweight on the credit side because we think the positions have been attractive, relatively speaking, and we've been trimming that. What we're been looking for at the moment would be a point that people begin to look probably beyond the next little while, but when you look to more the 2-year, the 5-year, the 10-year point, and you see the projections for interest rates remain more reasonable. At this stage, when you look at projections, say, in the US and Europe and other areas, they're projecting a real return to the lower rates, which is basically what the central banks are saying they're not going to do.
You're constructive on China and the reopening theme there. How do you want to play that story?
So I think that in particular where that's being played out is on the commodity side, and maybe a little bit different to before, but you look at what that means for stuff like iron ore, stuff like copper. It obviously is very good for the commodity complex generally, and potentially fossil fuels. Also, in the recent past, the biggest beneficiary has been Europe, an open economy that's been able to take advantage of that. I think, though, over the next while, where we're thinking about it is the broader emerging markets complex. And so what we've been doing is reducing some of our positions in developed markets and moving those towards emerging markets.
Okay, reducing developed, focused on EM and China, central to that play. Niall, thank you very much indeed for the analysis. Of course, Niall O'Sullivan, Neuberger Berman, CIO for multi-asset strategist EMEA, and Bloomberg's Christina Kino running through some of the key market themes. Thank you both for joining us. Coming up a little later, it is a miss for Givaudan as severe destocking hits out, but we're going to be joined by the CEO of the Swiss fragrance and flavors maker Gilles Andrier. That is at 8:30 a.m. London time. We'll talk about margins, input costs, and whether they can pass on some of that to their customers in 2023. Stay with us for that interview. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
Earnings season is here.
Consumers cautious in the UK.
Are we being overly optimistic?
The pain in earnings has not come yet.
Bloomberg breaks the numbers first.
Forecasting a double-digit decline in revenue.
On the back of record sales.
With exclusive expert analysis.
Tech this year feels so different.
As economies move into slowdowns, earnings are likely to come off.
They're going to be really closely watched.
The important part is the strength of the core franchises.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back. We just have some lines dropping from Adani Group and their CFO in response to the Hindenburg research report and claims by that group of fraud at Adani Group, claims by Hindenburg, of course, and Hindenburg Research. Now, the Adani Group CFO Singh commenting and putting out a statement saying that the company maintains the highest standards of corporate governance. This is our top story in the Bloomberg Business Flash, and here's Laura Wright. Laura.
Thanks, Tom. Yes, well, as you were saying, shares in Adani Group companies are falling after US activist investor Hindenburg Research said it was shorting the empire's stocks. It accuses firms owned by Asia's richest man of, quote, brazen market manipulation and accounting fraud. Hindenburg specializes in activist short selling. The report was released the same day that Adani Enterprises began a key share sale said to be oversubscribed. Adani Group's CFO says the company has always been in compliance with laws. The New York Stock Exchange says some trades will be declared null and void after a glitch caused wild price swings and trading halts in hundreds of stocks. The exchange says a system issue affected more than 250 stocks as trading started in yesterday's session without an opening auction price. Some of the biggest US firms, including Wells Fargo and McDonald's, were hit. Rupert and Lachlan Murdoch are abandoning plans to reunite their two media companies, Fox and News Corporation. Some investors had voiced opposition to the merger, saying it undervalued company assets. The deal, first announced in October, was widely seen as a way for Lachlan Murdoch to cement his control over the family media empire. That's the Bloomberg Business Flash. Tom.
Laura Wright here in London, thank you very much. Now, coming up, Danny Berger is joined by Chairman of European Fund for Digital Sovereignty, Alan Goddard. That is live from the IPEM Private Equity Conference in Cannes. That interview is next. This is Bloomberg.
They're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
News breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
big tech layoffs rolling in. Spotify, the latest to title its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority. From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Welcome back to the Open. We are 18, almost 19 minutes into the European trading day. You're seeing losses of 0.2% on the European benchmark. Concern, particularly in the tech sector, on the back of softening demand flagged by Microsoft for its cloud services business. And then a reminder, the stickiness of inflation from the CPI print out of Australia. Futures in the US pointing lower between 0.4% on the S&P E-minis and 0.7 on the Nasdaq futures. Now, the central mission of the European Investment Fund is to support Europe's SMEs by helping them to access finance, arguably never more important. And as such, it plays a vital role in Europe's quest for increased innovation and digital sovereignty. For more then, let's go to Bloomberg's Danny Berger, who is in Cannes this week for us at Europe's largest private equity conference, IPEM. And Danny is joined by a very special guest. Good morning, Danny.
Good morning, Tom. Thank you very much. And yes, the prior CEO of the EIF has started a new role. It is of chairman of the European Fund for Digital Sovereignty, also known as the Tech Champions Fund. He joins me now. It's Elaine Godard. Thank you so much for joining this morning. And I find this really fascinating that you're essentially now running a fund of funds, or you're starting up this fund of funds to make sure you invest in European tech, or at least European tech stays in Europe. But how did we get to this place where you're worried about European tech getting financing abroad? Why is European tech funding behind?
We are not worried by financing coming from outside Europe, but we would like to give an alternative source of funding to these companies that are growing very fast, are very successful, but don't get money from Europe. Actually, the worry is about the number of these companies. 3/4 of them are actually refinanced by non-European funds, being from the US or from Asia.
So what's the goal then? How do you get Europe up to speed?
The idea is indeed to build a fund of funds, so collect money from the member states. Actually, 22 member states, which is quite remarkable, have already signed up on this initiative. They will support the creation of a fund of funds, which at the end will support these companies through the emergence of big funds in Europe, which we don't have. If you compare the situation with the US, we have about 40 funds of an average size of 2 billion. In Europe, we have 3 of an average size of 1 billion. So at the end, we don't have the means to support the creation or the scale-up of these firms within Europe.
So you're coming from behind here. You know, the U.S., Asia perhaps has grown much larger. How long do you foresee it taking to get to a place, again, that you want to be at, where those funds are readily available for European tech looking to refinance?
It will be quite fast, actually, for a European initiative, I must say. So the first investment should come in the first quarter or half of this year. The idea, the ultimate goal is to finance about 15 to 20 bigger funds, so beyond 1 billion, and therefore to make quite a significant step, so maybe not as big as other players in the world are doing, but to be much closer to them and to offer very quickly some support financings to the startups.
So you mentioned that 22 member states have supported this, and we are in a moment where, given all of the concerns surrounding Europe, fragmentation has very much so been as part of the conversation. In trying to get member states on board, what would you say is the state of cohesion among EU member states, or perhaps fragmentation?
Yeah. This is a larger question. I mean, specifically there, I think we have been able to attract, their attention, because in most of the countries, you see exactly the same phenomenon. I mean, the best example is BioNTech, which has been financed from Europe by European funds in the early stage. And therefore, we know the rest of the story, whereby they got financing from the US, and then the contract with Pfizer and the industrialization of the vaccine abroad. So the idea is again to provide such a support, and what we observe across Europe, so it's not limited to one or two countries. Actually, wherever you go, and I've been spending a lot of time talking to them, most of them are actually very much concerned by the fact that their companies, but also actually their talent, which are moving from Europe to settle elsewhere and to develop their business from abroad.
Part of the conversation right now, especially when it comes to corporate Europe and energy transition, I know this is something the fund is looking at specifically, is the response to the Americans, to the Inflation Reduction Act. As you're looking at how funds invest in energy transition at the companies themselves, do you think that Europe needs some sort of response to this?
Yes, certainly, and Europe is thinking about how to facilitate, specifically in the rule of the competitions that we have in place. You may remember that during the COVID crisis, we have introduced some flexibility to this program and these rules. This will be certainly extended from now on, but it's probably not enough. I mean, in view of the amplitude of the program in the US. So therefore, we can expect some additional measures. I mean, this program that we are leading now is actually very well placed. I mean, to support the companies, because most of them will be actually attracted by this program from the US on the basis of new technologies, innovation. And therefore, this is exactly the point we are touching on.
So do you think part of the response should be more support for the Digital Fund for European Sovereignty?
Certainly, yes, certainly.
All right. Well, Elaine, I'm afraid that's all we have time for. Thank you so much for joining this morning. Really wonderful to talk to you. Tom, with that, I'll send it back to you. Elaine Godard, the chair of the European Fund for Tech Champions.
Danny Berger at IPEN in Cannes with the European Investment Fund CEO, Alain Paul Godard. Thank you very much indeed. Let's get back to some of the corporate stories and stocks that are on the move. EasyJet coming in with much better results than the markets had expected. You're seeing it rallying. Look at that, almost 9%. Losses coming in much lower for the last quarter than had been the estimates. Let me just give you a couple more lines on EasyJet, because they're also forecasting that the strong demand for their flights are going to continue in the quarters ahead. So they're projecting strong trends. They're going to continue to the second quarter. Bernstein saying that the airline reporting season has started optimistically, and they expect EasyJet to be the first of several strong prints across this sector, certainly being rewarded then for smaller losses than had been expected. Gilles Vaudin, we're going to be speaking to the CEO in the next few minutes, currently down 0.7%. It was a miss for the fragrance and flavors maker. ASML also coming in with a slightly better print in terms of the earnings picture, saying that they see sales plus 20% for 2023. Their most high-tech equipment, the lithography machines, still in demand for this year, despite the tensions around sales into China. Currently down 2%, though, that stock, ASML. And we'll bring you more on that story through the hour. Across your benchmark equities, you're seeing losses of 0.2%. Futures in the US, the Nasdaq futures pointing lower by 0.7%. Coming up, it is a miss for Gilles Vaudin. That's on destocking. We're going to be joined by the CEO of the Swiss fragrance and flavors maker, Gilles Andrier. That is next. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
On the Wednesdays on Bloomberg Television.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 30 minutes into the European trading day. Happy Wednesday. Here are your top stories. Downbeat sentiment. Microsoft falls in late trade after forecasting slowing sales for its cloud computing unit. Tesla earnings are out tonight. The US and Germany are said to be poised to send tanks to Ukraine. It is a move likely to prevent a fracture to Allied unity. And Adani Enterprises shares pare losses as the CFO denies allegations by activist investor Hindenburg Research, accusing the Indian conglomerate of accounting fraud. Let's check in on these markets then, and Microsoft sending shivers through the tech sector, and that is bleeding into a little bit of risk-off moves that we're seeing. The benchmark here in Europe just down by 1 basis point, down 0.2%. The DAX is off by 21 points, and here in the UK, the FTSE 100 just holding up by about 0.1%. The spat, at least the debate, and it is heated amongst ECB officials, continues. Panetta coming out last night saying, hang on a second, aren't we meant to be monitoring the data? We're getting ahead of ourselves if we are committing to continuous 50 basis point hikes from the ECB. Let's switch it over and see things are playing out then across sectors. No surprise to see that technology is the bottom of the list in terms of your sectors, down 1%, again tying into the Microsoft story and the importance of its cloud division and the outlook for demand, the beating heart of the Microsoft prospects there, and they are suggesting that sales will weaken in the quarters ahead. Healthcare also off by 0.5%. At the top of the list, utilities, a bit of a safe haven tilt then, gaining 0.3%. Travel and leisure, we talked about the gains for EasyJet, what that says about the broader airline space. It was a strong beat for EasyJet, and that individual stock is rallying on the back of that. Talking of the earnings season, it was a miss for Givaudan, as fourth quarter like-for-like sales disappoint at the Swiss manufacturer of flavors and fragrances. Morgan Stanley cites severe destocking in North America, hitting the company's taste and wellness unit. Joining us now is Gilles Andrier, Givaudan's CEO. Gilles, good morning. Thank you for joining us. It's a busy day for you and the team, of course. Talk to us about the demand outlook in terms of volumes that you're seeing from your customers in the quarters ahead, as you look ahead to the rest of 2023.
Well, first, looking quarter by quarter is not necessarily the right way to look at it because, you know, there is some seasonality in our sales. There are a number of new launches which can also distort the picture from one quarter to the other. There are the comparables. So there are many ways to look, and the best way to look at the overall year. So, you know, we are growing 5.3% in a year which was quite disrupted in 2022 with a lot of increase in input costs. We were successful passing on the price increase. And yes, you know, we have the US going down 5%, you know, on the back of a slowdown of the consumer demand, but also a lot of destocking, inventories of our clients, you know, coming down after they had lifted up those inventories. because of the supply chain. So this is certainly a one-time effect in 22. But at the same time, Europe actually, people focus on the US -5, but people don't focus as much on the fact that Europe actually grew 10%, which I've personally never seen in my last 20 years as the CEO of Givaudan. So that's why it really talks about the natural hedges of Givaudan. When one geography is down, it compensated by another geographies. And we can say the same with clients. So what we see with clients, we have the global clients, yes, we see many of their volumes coming down on the back of high price increases. But for us, this is compensated by actually an increase of volumes with local and regional clients, which are growing 4 times the rate of global clients. So it talks again about the natural hedges.
Okay, and you talked about the ability last year to pass on some of that input cost. Are you able to continue to do that in 2023? What level of increase in terms of pricing? Are you talking 3%, 4%, 5%? What level do you need to offset that input price?
So essentially in 22, we had 10% of additional input costs. So you're talking 270 million plus another 90 million of energy, freight, and so forth. So in total, that's 360 for an EBITDA of 1.5 billion Swiss francs. So if we had not done any price increase, we would be, this 360 million down. We actually managed to protect the EBITDA. So the EBITDA remains at 1.5 billion Swiss francs, thanks to the price increase that we managed to pass in 22. But also cost containment. So going forward, we see still some remaining headwinds, especially with natural products, which will convert into a 5% for the group in terms of raw mat increase, which will be again fully compensated with price increase. So price increase is never an easy conversation with clients, but they've been very collaborative, and we are managing actually to over 2 years to fully compensate both raw mats increase and energy costs through price increase. So we are very confident there.
Gilles, very quickly on China, the reopening impact of China on your business.
So actually, China was not that bad. We grew actually 2% in China. China is a big market for us, 7% of our sales. And so with the reopening, we remain optimistic that the domestic sales in China will remain and will come back to growth that we've been used to. What's interesting as an overall trend is that Chinese have been consuming much more than before, and that's really a positive trend for fine fragrance perfumes. Have been supported by the Chinese consumption overall in the world.
Okay, Gilles André, Givaudan CEO, on the back of those results, thank you very much for your time this morning on the optimism around China reopening and the challenges, of course, of passing through those high input costs. Now, shares in Adani Group companies are paring losses. That's as the CFO denies allegations by activist investor Hindenburg. The short seller accuses firms owned by Asia's richest man of, quote, brazen market manipulation and accounting fraud. Adani Group's CFO says the company has always been in compliance with the law and maintains the highest standards of corporate governance. For more, let's bring in Bloomberg's Sanjay PR, who covers conglomerates from Mumbai. Sanjay, what are the key allegations then from Hindenburg Research?
The research actually make key allegations about its account manipulation, fraud, and the reports also suggesting about the kind of shell companies which is created, and it's also highlighting towards the kind of brothers who was holding the accounts. Most of them are shell companies, etc. These are the key allegations that Hindenburg has made. It is not the first time a firm like Hindenburg is making it. Last year, credit sites also warned about potential default by Adani Group, which is owned by Asia's richest man, Gautam Adani.
Yeah, indeed. And what has the response been then? We touched on some of it from the business, from the CFO, and to what extent is it likely to assuage investor concerns?
Oh, this is a good question. Actually, you have covered a fair bit of it, but he also mentioned about the timing of this such a report. It is like mistimed, or it's the CFO is saying that they are in they're in compliance with the regulations, and this timing clearly shows that this is like malified intention is behind this kind of a report. That's what he said. And as we speak, Adani Group stocks have lost around 4.2%, excluding the cement stocks, which they bought in off late, and the market value is around 6 billion has been wiped out. So it has been slightly stopped. So the market is expecting that further erosion will be stopped with the entry by CFO denying all these allegations, and they're thinking that high-profile investors are still in line with Adani Enterprises, which has actually launched today a follow-on issue or FPO.
Yeah, and talk to us, the timing is intriguing, isn't it? The news breaks around this Hindenburg Research report and the short position they're taking, and then you have the share sale today. How well received or not was that sale of shares?
Both are on the same day. That is very interesting. Yeah. What we picked up from the sources is that key sovereign funds like IHC, Mubadala, ADIA, and others like Society General, White Oak, and other leading, and including some domestic investors, Indian domestic investors like Life Insurance Corporation, SBI funds, HDFC are keen to invest, and we will. The final picture will emerge by 4:30 Indian time when they actually inform the stock exchange. But what we pick up from the sources is that the follow-on issue is going to be a resounding success with kind of, like great participation from key sovereign funds as well as domestic financial institutions from India.
Okay, Bloomberg's Sanjay in Mumbai, thank you very much indeed. Right, let's get you up to speed with what else is happening and bring you back to the story in the UK. We're going to tease a story, in fact. We've got Lizzie Burden on the ground outside Coventry. So let's bring you that tease. We're going to be looking ahead. She's basically outside the headquarters of Amazon in that city, and she's reporting on industrial strife there. We've got plenty more coming up. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Do you think today it's easier for a Black entrepreneur to start a company, or no more easy than it was 20 years ago or 30 years ago?
If it were easy, you would see more Bob Johnsons, more Michael Jordan, more Magic Johnsons, and Oprah Winfrey's and the like.
Welcome back to the Open. We are 42 minutes into the European trading day. Pretty subdued action across European equities, just a loss of 0.1%. Top of the list, basic resources. Bottom of the list, technology. That ties into the Microsoft story and flagging of weakening demand. Futures, S&P E-minis down 0.3%. Let's get to the geopolitics then. And the US and Germany are poised to announce they will supply Ukraine with their main battle tanks. It is understood that Berlin has decided to send Leopard tanks after Washington agreed to send its own M1 Abrams tanks. The move would represent a major policy shift for both President Biden and Chancellor Scholz over in Germany. For more, let's bring in Rosalind Mattison, who is across all of this for us. Ros, the significance of this, why Ukraine needs these tanks, and why we've got Germany and the US coming together on this, seemingly at the last moment.
Well, that's right. Obviously, the clock is ticking, and this is happening now because there's a real sense that Russia may be gearing up as soon as next month for a fresh new offensive, possibly in the east, possibly even back through Belarus in the north, and that Ukraine needs to get ready for that, not only just to be able to potentially stop Russia in its tracks, pardon the pun, but also to push Russia back from the territory it's been occupying in recent months. Of course, the war on the ground is very bogged down through the winter months. No one's really making much ground. And this could be the moment for either country to really make that push. And so for Ukraine to really be in a better position, they need these tanks and they need them with speed. And that's the realization that's really come through for Germany and the US under quite a lot of pressure, of course, from other countries in Europe. We've seen Poland be very, very public in pressing Germany for weeks to make this decision.
And Zelensky, from day one, really has called for tanks. What impact will it have on the ground for the Ukrainians?
It could be quite substantial because Ukraine's been relying on Soviet-era tanks, Soviet-made tanks. These are very old. They've burned through a lot of them, as has Russia, by the way. And what they really had since then is sort of armoured personnel carriers. These are lighter, obviously much more fragile. These are really big, heavy, proper Western-made tanks that are built to do a big job in the field. In fact, they're so heavy, 70 tons for the US tanks, they might get bogged in the mud of Ukraine. But either way, they're much more effective on the battlefield. And if you're trying to really push through villages, towns, and not just sort of like go through them, but then sustain them, you need to send your tanks in first, protective ring for your infantry. So they really could be a game changer for Ukraine.
And part of the calculation for Washington, for DC, but also clearly the Germans, is that this could provoke a calculation, or at least an escalation, I should say, by Vladimir Putin. Do we have any sense of the Russian response to this move?
Very quiet so far. But of course, Russia has been saying throughout, each time that they send different kinds of weapons in, they're going to retaliate. And so far, we've not seen that happen. So the calculation here, obviously, is that they can now send these in and not have that substantial risk of Vladimir Putin saying this is a direct attack on Russia by NATO, by these countries, and we're going to have to retaliate. So they're taking that call at this point. And they're also just taking the call that Ukraine needs it. And if they don't go now, it's going to be way too late. And so that's why these tanks need to get there ASAP. The question is, will they get there in a matter of weeks, or is it going to take months?
Yeah, the time frame really, really important. Rosalind Mattison, thank you for getting us up to speed on that decision, reported decision at least by the Americans and the Germans to start supplying tanks to Ukraine and the potential Russian response. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Former Vice President Mike Pence is the latest politician to be found with classified documents in his private possession. According to Pence's attorney, a small number of items were found at his home in Indiana and turned over to the FBI after a recent search. 2 special counsels are investigating similar breaches by President Biden and former President Trump. The New York Stock Exchange says some trades will be declared null and void after a glitch caused wild price swings and trading halts in hundreds of stocks. The exchange says a system issue affected more than 250 stocks as trading started in yesterday's session without an opening auction price. Some of the biggest US firms, including Wells Fargo and McDonald's, were hit. Australian inflation accelerated to the fastest pace in 32 years in the final 3 months of 2022. That's prompting money markets to price in an interest rate hike at next month's RBA meeting. Consumer prices gained 7.8% from a year earlier, ahead of economists' forecasts for 7.6%. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Okay, Laura Wright here in London. Coming up, strike action in the UK spreads from the public to the private sector. We are live at Amazon's warehouse in the English Midlands. That is next. This Here's Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Welcome back to Bloomberg Daybreak Europe.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Is the UK levelling up? The data suggests not. In 2019, the Conservative Party won an election promising to level up Britain.
You've changed the future of our country.
Yes.
For the better.
That's to say, spread wealth and opportunity across the country to close the gap with the richer region of London and the South East. Bloomberg is tracking the progress of levelling up against the government's own metrics, which include measures such as pay, productivity and well-being. And the picture is getting worse. Since 2019, 77% of constituencies have fallen further behind London and the South East. In the so-called red wall seats, the former industrial heartlands that swung from Labour to Conservative at the last election, 97% are losing ground against London. And there are direct levers the government could be pulling to reduce regional inequality, but it's not. In transport, for example, London and the South East received £905 of spending per head at the last count. That compares to just £442 per head in the North East, and that gap has widened since 2019. The spending gap on overall public services has also widened in favour of the capital. The danger for Rishi Sunak is he risks an electoral backlash if voters feel like the Conservatives have not delivered on the levelling up promise.
Bloomberg UK's government reporter Joe Mays there on the failure of the levelling up policy, at least to date. Let's take in on some of the individual corporate stories. Big week, of course, for earnings. We had ASML coming in with a beat. There is still continued strong demand, particularly for its high-end ultraviolet lithography machines, and seemingly brushing off concerns about further restrictions as Japan and the Netherlands, those two governments, get closer to aligning with the US on restrictions of sales to China. That stock, though, down 1.7%. Givaudan, we spoke to the CEO about the challenges that they faced last year, particularly around pricing. They've seen a lot of destocking in the US. They do, though, the CEO, see some optimism around China reopening, particularly for its fragrances. That stock currently down 0.7%. And look at EasyJet, absolutely flying. Excuse the pun, close to 10%. By the way, its rival Ryanair also up a little over 3% on the back of optimism. Linked to the EasyJet story, yes, the earnings came in. It was a big beat, losses far smaller than the most recent quarter, and they continue to see very, very solid demand. And again, the stock gaining significantly on the back of that news. The broader picture around the airline sector looking pretty positive at this stage. It's a slightly different picture when it comes to industrial action, and particularly around Amazon. Amazon's UK workers, they are on strike today. It is for the first time at the e-commerce giant's warehouse in Coventry. Bloomberg's UK correspondent Lizzie Burden is on the ground for us. Lizzie, what is the latest?
Well, Tom, I'm not sure if you can hear the parping. We're on the picket line and cars are being stopped by the union on their way in to see whether they want to join the strike. 300 workers at this Amazon fulfillment centre are expected to join today. They're members of the GMB union, which is asking for a 50% pay rise to £15 an hour. It says that's necessary for workers to deal with the cost of living crisis, and they say they deserve it because they've grafted through the pandemic. But Amazon isn't even entertaining that demand. It says that its offer on pay is competitive. It pays the national living wage. It's proud of what it pays, it says. But the union says, well, there's nothing to brag about paying the absolute minimum. Amazon has paid about £10 million in tax on about £200 million of profits in 2021. The union says if Amazon doesn't give in today, it's going to try to organise more strike dates later on in the coming weeks.
And the importance of this story is that this isn't just a Coventry-focused issue. It's not even just an Amazon-focused issue. This is about the spread of industrial action from the public sector to the private sector. Talk to us about that, Lizzie.
Indeed, Tom, because it shows that discontent has spread from public to private. You've already seen the chaos across transport, healthcare, the civil service, teaching, but this is the private sector too. And what's significant about that is it gives new meaning to the warnings about a wage price spiral. You've already seen wage growth at its fastest on record outside the pandemic in November. Amazon, unlike the National Health Service, could raise prices to cover a higher wage bill if it were to give in to these demands. And that could add to the persistently high inflation that we're already seeing in the UK, the very thing that these workers want to fend off to help themselves deal with.
Lizzie Burden on the ground in Coventry for us at that Amazon warehouse. Thank you very much indeed. Let's check in on another major story for us. And we have had the response now from Adani Group and their CFO pushing back on these allegations from Hindenburg Research, who have taken a short position on this company on claims of fraud. The CFO saying that they stick to the highest standards of corporate governance, and that Adani has always been in compliance with the laws. That is according to the group CFO. And some of the pressure on the stocks, of course, this is a conglomerate with multiple different business entities. Some of that pressure has ebbed on the back of that CFO statement. We continue to follow this story. Of course, the founder is Asia's richest man. Across your European markets now, you're seeing losses of 0.1%. Stateside futures pointing lower by 0.4. Stay with us. Surveillance Early Edition is up next. This is Bloomberg.
as governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Here's what's coming up on today's programme. Downbeat sentiment, Microsoft falls in late trade after forecasting slowing sales for its cloud computing unit. Tesla earnings, they are out tonight. And Tesla invests $3.6 billion in 2 new EV battery factories in the US. We will be watching out for the tech giant's results today. And the US and Germany said to be poised to send tanks to Ukraine. It is a move likely to prevent a fracture to Allied unity, at least for now. Let's check in on these markets. In the doldrums, really, on the back of the Microsoft forecast around ebbing demand for its cloud services business, such a dynamo that has been over the years for Microsoft, and it's a competitive space, so the read across to the broader tech sector is being felt. Just down a little over 0.1% across the European benchmark. Futures in the US pointing lower by 0.4%. Nasdaq futures down by 0.6, and Bitcoin set for its first 2 days of losses, 2 straight days of losses for the year. In the last 30 days, it's actually performed very well indeed. Bitcoin currently off by around 1%, 22,678. Worth noting as well that Jeremy Grantham, of course, famed bear and famed strategist, predicting that maybe you could be looking at further 17% downside for the S&P. That is his call, his warning, of course, as investors weigh up the risks around inflation and possibly over-tightening from these central banks would be the contention from some. We have the map around Europe showing us how things are playing out. Before I get to that, though, a redhead crossing on the health of the German economy. The German January IFO Business Confidence Index coming in at 90.2, just below the estimates of 90.3. IFO Expectations Index 86.4. So the expectations index has actually improved versus the estimates of 85.3. The redhead, though, the IFO Business Confidence Index, the top line, 90.2, just slightly below the estimates. We're going to be speaking to the head of the IFO group later in the show to get that analysis as well. Of course, the Chancellor over in Germany, Olaf Scholz, saying that he expects that Germany will avoid a recession. We're just quickly checking in on Microsoft now as we weigh up, of course, the comments from the CFO that despite the top line, they did beat in terms of earnings, but it's the forward guidance on demand, again, for cloud and software services, currently down 1.3%. So a little bit of dissatisfaction from investors around Microsoft on that outlook, and that had been the key concern, not just for this company, but for many within the tech space. In a higher rates environment, where is demand going for their corporate clients in particular? We continue to keep across that story for you and the market implications. Now, there is a lot, of course, to digest this morning from the markets, including the tech sector. As I said, Microsoft saying that revenue growth in its cloud computing business will ease, as I mentioned, whilst also warning of a further slowdown in software corporate sales. We're joined now by Paul Leach, co-head of global equities at Barclays. Paul, let's start then with technology. We don't have to get into the specifics of Microsoft, but how concerned are you about that step down in demand? When do you expect to see a turnaround? What would you need to see to turn bullish on tech?
Yeah, morning, Tom. I think tech is clearly a critical sector. I think the big thing for this week is really tech earnings. You know, we saw the start of it last night. I think investors and our clients are going to be watching that very, very closely. A couple of things to think about. One is positioning. I think when we look at equity markets generally and the start of this year, it's been very influenced by positioning. Obviously, the tech space was very much in focus last year, and we saw particularly the large cap tech space sell off fairly significantly. In the last 2 months of last year, the focus has been very much macro in terms of inflation and growth concerns. Now, as we head into Q4 earnings, we turn more micro, and in particular, tech is going to be very much in focus.
So is it a pause from the Fed or a cut that you'd need to see as the trigger to get greater exposure to some of these mega cap stocks, or is it something else?
Well, I think it's a number of things. So on the macro side, people are going to watch the Fed very closely. I think in terms of the market perception on where the Fed is going, that has significantly improved in the last 2 months. I think what is more relevant now, particularly as we go through earnings, you know, for the rest of this week and next week, is going to be really that forward guidance that we're hearing from the companies reporting.
And you talk about that market optimism around the direction of travel for the Fed, but there is that disconnect between what we're hearing from the Fed, higher for longer, versus markets pricing in cuts at the end of this year. Who's getting this right? When does the market wake up to what the Fed is saying? Or do you think, in fact, the Fed will be compelled to cut?
Well, look, I think the market, yeah, it's an interesting dynamic between the two. I think markets have had, as I said, more clarity over the last, particularly the last 2 months of last year. If you go back to the November CPI print, you know, that was the kind of first signs that there was some cooling of inflation, and inflation was a little bit more under control. Now the markets are trying to balance that inflation outlook with the growth outlook. And I think markets have got used to the fact that the Fed will react as the Fed sees appropriate. And, you know, I think there's still a reasonable amount of uncertainty over the next few months. And, you know, obviously, still those macro elements are going to be driving equity markets, but probably not as, it's not going to be as pronounced as it was in the last 3 to 6 months of last year.
Okay, so that input, macro input, becomes a little less potent.
That balance of macro, micro is tending a little bit more towards the micro, where it was very macro dominant latter half of the last year.
Paul Leach is sticking with us, very pleased to say. We'll get more calls from Paul Leach, co-head of global equities at Barclays, in just the next few minutes. Coming up though, strike action in the UK spreading from the public to the private sector. We're live at Amazon's warehouse in the English Midlands next. This is Bloomberg.
Crucially important, and I think we've moved from
this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, Paul Leach, co-head of global equities at Barclays, is still with us. And the view from Paul and the team at Barclays is this: Europe is in a sweet spot. What would have to change your view on Europe versus the US? How much more room does this outperformance have to run for Europe?
Yeah, I think some of this, Tom, is due to the fact that, you know, the data we've seen coming out of Europe in the last, you know, particularly in the last 2 months or so, is being, I think, is way more encouraging relative to expectations. I think the sentiment on Europe has been very poor for most of last year. I think what's also interesting is positioning in Europe is very light. We see that from, you know, the various fund flows that we observe, and, you know, very interesting to see the price action in the first couple of weeks of this year. So first 2 weeks in January, European markets were up nearly 10%, significantly outperforming
So
the
this
US.
has further to run. You want to increase your exposure to Europe. That would be the call. And talk to us about the FX effect, because it was a tailwind. It was a tailwind for European equities last year. Now a little bit of strength coming through for euro. Softer dollar is the call from many. Does that prove a headwind for European equities?
I think the reason, so from an FX perspective, I think if you're looking at, you know, predominantly euro and sterling relative to the dollar and the strengthening that we've seen recently, that, while technically you could argue it's a headwind for equities, it's the reason of that strength which I think gives us some confidence. That is really on the back of a fundamentally improved macro data picture that we have seen. And in addition to that, we have seen a kind of a calming of the energy price concerns that we had as well. So, you know, with energy prices coming down, that in combination with the better macro outlook is giving us more confidence from a relative value perspective of Europe versus the rest of the world. And, you know, that is really what's driving the currency strength, so it doesn't concern
And we
us.
were talking before the break around inflation and expectations that maybe it started to pivot, at least in terms of ebbing lower on inflation. But that does mean that margins are going to be squeezed for some of these corporates. Where are you finding margin resilience?
Yeah, look, I think one thing that we're starting to see is, just from a sector point of view, is cyclicals relative to defensives. I think a lot of the equity positioning was in defensives last year. Cyclicals feel relatively under-owned, so that's one area that we would definitely look to. And I think positioning has been a very significant driver of price action so far this year. And, you know, as I touched on earlier, Europe was generally underweight. We've also seen Asia as an underweight as well. And, you know, they are the two regions that have significantly outperformed in the first few weeks of this year.
Okay, Paul Leach, thank you very much indeed. Co-head of Global Equities at Barclays on the opportunities in Europe, the sweet spot, and the fact that much of that remains under-owned, opportunities in cyclicals as well as we weigh up the recession and inflation risks. Coming up, we're going to take the temperature of the German economy. IFO Institute President Clemens Fuest joins us next. Stay with us for that conversation. This is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Let's get back to what is happening in Europe's largest economy. Germany's business outlook brightened further as the recession many had feared after Russia attacked Ukraine looks increasingly likely to be avoided. That is the top line from the IFO data just out. IFO Institute President Clemens Fuest joins me to discuss the numbers. And Clemens, we always enjoy your input on the back of this survey, the importance of the IFO Institute and its assessment of the health of the German economy. And you put out in your statement, and you say, the German economy is starting the new year with more confidence. How confident are you that that confidence will continue and then indeed Germany will avoid a recession?
Well, it does look like Germany is going to avoid the recession. The expectation until recently was that the fourth quarter in 22 might be negative and the first in 23 as well. Now it looks like we've had stagnation in the last quarter, something the IFO index had been signaling for some time. And now we see a further improvement Not so much in the current business situation, but companies are telling us they are optimistic regarding the next 6 months. And that suggests overall we will avoid a technical recession. We still expect a shrinking economy in the first quarter, but then an improvement towards the summer.
And a lot of this has come down to, of course, falling energy prices and a slightly milder winter than many forecasters had expected. What is your understanding of corporate Germany's ability to remain resilient within the changes that we're seeing around energy?
Well, the most important risk for the German economy was a gas rationing scenario. So not just high prices, but a scenario where there simply wouldn't be enough gas available. In that scenario, there would have been rationing, in particular for manufacturing companies. So the gas plan was, in that case, to, of course, keep up heating, serve households, but let the burden of the rationing fall on manufacturing, and that would have led to a sharp decline in economic activity. That risk is off the table now due to the mild weather. Gas storage is full. And that's the most important factor. There are other factors. We see that supply chain bottlenecks are easing. They are still there, but they are easing. There is optimism that the Chinese economy might be opening up, not quite yet, but in the summer. That does have risks for commodity prices and energy prices, but it will probably further ease supply chains and also stabilize the export demand. So the perspectives for this year are getting better.
And on China then, let's stay with that story because it is hugely significant, of course, for the German economy, which has so much exposure to the world's second largest economy. Which parts of the German industrial base are best positioned for that reopening theme?
It's probably most important for the chemical industry, for the car industry, for machinery, the metal industry. All of these sectors have huge exposure to China. One thing we shouldn't forget is that exports to China are as important as imports from China. So roughly half of all German companies are saying they are getting critical inputs, important inputs from China. So if bottlenecks in the delivery of these inputs improve, this will have a very broad impact on German manufacturing, almost all sectors.
I have to wonder whether what we're hearing from the IFO Institute and the data that's coming through from Germany is just going to bolster the case amongst the hawkish camp at ECB to go higher and longer on rate hikes. And we've heard that from some of the hawks, whether it's Klaas-Knot or others, saying, we need at least a couple more 50 basis point hikes. Does that pose a risk to the recovery that we're starting to see, or at least the less dire picture when it comes to Germany's economy?
Yes, the ECB has to strike a balance here, as you say, between fighting inflation and avoiding and overshooting and avoiding producing a recession or making the recession worse. Now, clearly, these numbers we are seeing today do lend some support to the hawks. One thing we shouldn't forget is that core inflation is still increasing. So headline inflation is declining because of declining energy prices, but core inflation is still increasing. We are now seeing an impact on union wage demands in Germany. Public sector unions are asking for wage hikes higher than 10%. And I guess that means the ECB needs to continue increasing interest rates, probably at a lower pace than in the last autumn, but they are not out of the woods yet.
And in terms of balance sheets, as we look at higher rates then, across corporate Germany, is there a vulnerability there? What is the debt picture overall looking like in terms of the exposure to higher rates for these big corporate names in Germany?
Maybe I wouldn't call it a balance sheet risk because overall balance sheets are relatively solid, but we do see banks becoming more reluctant to lend to companies. In our last survey, roughly 1/3 of all companies are reporting they have talked to banks and didn't exactly get what they wanted. So there are clearly more restrictive financial conditions. And these conditions do have an impact on manufacturing. The bigger impact is on construction. The German construction sector is the one sector where we don't really see a recovery. And that's because in this sector, interest rates and financing conditions are so important.
Okay, that's really, really interesting context. As ever, fantastic to speak to you. IFO Institute President Clemens Fust on the back of the latest line there from the IFO Institute. A gauge of expectations rising to 86.4 in January from 83.2 the previous month. That is, for the context, the fourth consecutive improvement and a bigger increase than economists had expected. Plenty more coming up. Okay, Amazon's UK workers are on strike today at the e-commerce giant's warehouse in Coventry. It is the first time that there's been an official walkout by Amazon staff in the UK. Bloomberg's UK correspondent Lizzie Burden joins us from Coventry. Lizzie, what is the latest where you are?
Well, Tom, you can see the union officials behind me from GMB. They've been stopping the cars and the lorries on their way in, asking workers if they want to join the strike, join the union. And in fact, lots of workers have turned around at the gate and gone home, joining the strike. They're expecting about at least 300 workers to join it today, and it's all about pay, Tom. They want to see a 50%, 50, rise in pay to £15 an hour. They say that they need it to deal with the cost of living crisis. They deserve it because they've worked hard through the pandemic, and they say that Amazon can afford it because it only paid about £10 million in tax in 2021 on about £200 million of profit. That's their argument. Amazon says, though, it's proud of the pay packet it offers, it's competitive, and it's above the national living wage. The workers, though, say that's nothing to brag about. But Amazon really does have to deal with its own problems. It's having to adjust to the post-pandemic retail environment, people going back to their pre-pandemic shopping habits. Amazon, of course, has announced already that it's going to cut about 18,000 jobs this year. That's 1% of its total workforce, the biggest cull in its near 30-year history, Tom.
Lizzie Burden on the ground for us in Coventry outside that Amazon warehouse. Thank you very much indeed. Our UK correspondent, of course, on the industrial strife that's spreading from the public sector to the private sector. Now, we will be covering all things UK every week, of course, on Thursdays at 9:30 in our half-hour special. So stay tuned, or tune in at least for that one. Let's quickly check in on the broader markets before we get to some of the individual stocks. You're looking at losses of 0.3% across the benchmark. ASML coming in with earnings that actually beat, but at its stock is down 1.2%. Aviva rallying at 2.6%. EasyJet up 10% on much better earnings than had been expected and forecasts of very strong demand for travel going forward. Stay with us. We're going to be speaking to Helen Steers, head of Europe at Pantheon Ventures. That interview live from the IPEM PE conference in Cannes with Danny Berger. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This
is Count Under the Close. Welcome to Bloomberg Crypto.
Welcome back. Downbeat sentiment. Microsoft falls in late trade after forecasting slowing sales for its cloud computing unit. Tesla invests more than $3.5 billion in 2 new electric battery factories in the US. We will be watching out for the tech giant's results tonight. The US and Germany are said to be poised to send tanks to Ukraine. It is a move likely to prevent a fracture to Allied unity. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Now, it is the final day of Europe's largest private equity event in Cannes. This year's IPEN conference comes after the sector experienced a tough 2022, driven, of course, by economic and geopolitical uncertainty. Danny Berger has been on the ground in Cannes for us this week, speaking to a lineup of fantastic guests to give us insight. Danny.
Tom, thanks so much. And the great conversations continue. I'm really pleased to say that joining us now is Helen Steers. She is a partner at Pantheon Ventures and also is a member of the International Investment Committee that, of course, makes all the decisions for investing for Pantheon. Helen, so great to have you today. In sunny Cannes, a great location. Look, it is sunny, but it's been tumultuous in markets, if I can make an awful weather-related pun. We were just talking about this idea. Of course, you have a listed vehicle for which you are the manager of, and it's been discounted by the market, about 40%. What do you think investors are getting wrong?
So it's a really interesting question, actually, because this vehicle, Pantheon International PLC, has actually been around for 35 years, and it's been around through lots of different cloudy weather, whether it was the GFC or COVID or, with the latest sort of perturbations in the market. So it's been through a lot, and it's a well-diversified vehicle, well-diversified globally, by sector, by manager, et cetera, et cetera. So it's a little bit of a mystery to us why it's being discounted by the market. But in fact, the whole of the listed private equity sector is being discounted by the market. We're not the only ones.
Well, I have heard this criticism, again, this is about the whole industry, that perhaps valuations haven't come down in private equity just as a weird quirk of not being marked to market, that things in the industry should look worse. And Cliff Asness, one prominent hedge fund manager, basically says people are making up prices. Do you think that criticism is fair and perhaps plays into that?
So I've read a lot about this, actually, and I think what people are missing, perhaps, is the way that private equity valuations do tend to be quite conservative. And we've got the proof of that, actually. If you look at our listed vehicle and you look at the average uplifts on exit, cash doesn't lie. So you look at the actual cash that you receive versus the last full valuation that the manager has made, and our average uplift over the last 10 years has been 31%. So that means that actually the assets in our portfolio are actually undervalued. And in fact, that's not unusual. When we look at our private equity managers, we track what happens with the exits. Very often there is quite a substantial uplift upon exit. And I think it's normal because private equity managers don't like to deliver bad surprises. to their investors, so they do tend to smooth the valuations.
Yeah, I'm sure it is very few, if no, investors that would like a bad surprise. What does the environment for exits look like right now?
It's been pretty slow for exits, and I think, if you look at the general environment, it's probably not surprising. We don't rely very much on the IPO market. Only 10% of our exits are actually through IPO. So the slowing of the IPO market actually hasn't affected us too much. Most of our exits are actually to trade buyers, and trade is still there, but for the right assets. So good assets are still being sold, and still being sold at good prices, but there is a general slowdown in the market.
How would you compare that to past crises? Does this one seem more severe than others or worse? I mean, now, because it's not just a crisis, you also have higher rates now, too.
Yeah, I think every crisis is different. I mean, COVID was different. We lived through that, and that was something that affected supply chains very quickly. And then, clearly, with everybody working from home, that was something that nobody had ever seen before. The GFC was different again. So I think each crisis is different. The great thing about private equity and the best private equity managers is that they can address themselves to help the companies and to help them through these crises. We saw that in COVID. We're seeing it now as well.
But do you think we'll see a shakeout in this industry of those who do well during this period and those who don't?
I definitely think there will be some big dispersion in performance, and it's happened before. If you look at prior crises, as you asked, then you tend to see there are winners and losers. The best managers are the ones that have operating expertise, sector expertise, and really apply themselves to helping their portfolio companies.
So doing the work then?
Doing the work.
Do you think then, over the past 5 years, there was some degree where it was almost too easy, that you didn't really have to do that work, that you could essentially, put leverage on a company and get better returns?
Well, I think a very wise man once said, a rising tide lifts all boats. So, yes, we've had 10, really good years. And, of course, there have been some managers that have really sort of ridden on the coattails of that. But I think now in this environment, the really good managers will come to the fore, and you will see the ones that have been, doing the best for their portfolio companies.
So you were discussing the type of deal that is most successful. What about when it comes to sectors? Are there opportunities in certain sectors right now and perhaps less in others?
So we look for long-term trends. So it's not really very much about now, the next 3 months, the next 6 months. We're looking for ongoing sector trends. So digitalization and automation is a trend which has been here for a while. It's not going anywhere because the world is getting more digitized. So that's a very big trend, and that leads us to invest in areas such as enterprise software, which is still only, still becoming important in industry. Aging demographics, so healthcare, another big trend for us, but anything which is really helping particularly developed economies with their healthcare issues, and that's really been accentuated by what's happened with COVID.
How are valuations in these areas? Because they are really clear, pronounced trends, it means that a lot of people see them and probably have interest in them. How do valuations look?
So valuations have been toppy in the tech sector, and we all know about the very speculative tech stocks that went through the roof during COVID. I think the key, again, is going back to what I said earlier about microsegments and looking for particular companies in particular microsegments that have got a lot of runway for the future, and which the market will reward, I think, in the future.
How difficult is it to get financing in this environment?
So I think, again, for the right assets, it's fine. And for the right size of assets, I think as you go further up the deal size, it becomes more difficult. We tend to specialize more in the mid-market, smaller mid-market, and there you can still get financing for deals.
Do you foresee some of the big players, or perhaps it's already happening, the ones who are usually in large cap, then kind of moving down the food chain, as it were, if that's the place you can get financing?
Yeah, it's a good question. I think that it's quite difficult for those very big players because they have very large funds to deploy. So logically, I think deploying it in lots of small deals is going to be very hard for them. What we do see them doing, though, is making add-on acquisitions, and they often come down into the mid-market to buy companies in our portfolio, actually, to add on to their platform companies.
So just another thing for you to take advantage of.
Exactly.
Helen, so wonderful to talk to you. Of course, we're wrapping up right as the sun comes up, so perfect timing. Tom, I'm going to toss it back to you with that. Helen Steers, partner at Pantheon.
All right, excellent stuff. Danny Berger in the sun for us in Cannes with that deep dive on the PE sector. Thank you. Right, let's get you up to speed on what's happening with the BOE. We've had some repricing from these money markets. Take this. Traders now fully pricing in a 25 basis point BOE rate cut this year. They're expecting now a terminal rate of 4.5%. 4.5%. The expectation is then that that moves to 4.25% by December. This, and the reason for this, is because of the UK factory inflation that came through in yesterday's data, rising at the slowest pace in almost a year. And here's the reaction then. The pound at 123, but the moves are really in the gilt markets, particularly in the belly of the curve. The 5s and the 10s, 7 basis points lower. A move lower by 7 basis points as money moves into gilts in the belly of the curve on expectations that the BOE could cut by the end of this year on softer factory inflation. We'll keep across that story. Developments within the central banking space and, of course, what it means for these money markets. Coming up, Germany and the US are said to be poised to provide tanks for Ukraine after months of reluctance. It's an important geopolitical turn of events. We have the details. This is Bloomberg.
As governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
The moment news breaks, no one covers the world like Bloomberg.
The return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
We earmarked our 14 Leopards tanks, and now we wait also for Leopards from Denmark, Finland, Germany, and tanks from the other countries of the European Union, because we wanted to inspire others to actually gather more tanks to have potentially 60, 70, up to 100 of very modern tanks, which can make a difference on the battlefield in Ukraine.
We decided together with the United States that we will do something with special tanks.
If Germany gives own Leopard battle tanks to Ukraine, we will do this in line with the alliance.
And without it, it's going to be very tough for us.
Bloomberg TV, they're speaking to key decision makers at Davos as the US and Germany are poised now to announce that they will indeed supply Ukraine with their main battle tanks. For more and with the details, I'm joined by Bloomberg's Rosalind Madsen. Ros, when then could we start to see Western tanks deployed, moved into Ukraine?
Well, we're likely to get an announcement as soon as today confirming what we're hearing, which is they are indeed going to promise to send these tanks in from the US and from Germany, and of course Germany's allies in Europe, which have hundreds of these tanks sitting there that they can now send in with Germany's approval. So that could come as soon as today. Then there's a process of agreement about training. These are big Western-made heavy tanks. Ukrainians have been working on Soviet-era tanks, so they need training on these things, and that can take weeks for a start. So how does that happen? At what point then can you ship them in and have them operational where they need to be, which is probably in the eastern part of Ukraine? And if they have to come in from the west, it's a long way to travel. So we're talking possibly quite a few weeks before these tanks could be on the ground operational and doing what they needed. And is that in enough time for a potential Russian offensive that may come as soon as next month?
And part of the US rationale for not passing on these Abrams, not shipping them into Ukraine, is the complexity of these machines, the weight, the fuel, jet fuel, I believe, is used in Abrams. So to what extent can these actually have a practical impact, particularly if you haven't had Ukrainian military being trained on them already, or has that started?
Well, that is the question. The US tanks, the Abrams tanks, they're 70 tons and they take a huge amount of gas and they need a lot of maintenance in the field. And if you're not trained in maintenance as well as able to use them, it can present difficulties. There's questions about whether they'd be so heavy they're going to sink into the terrain of Ukraine. That said, they do work well with the Bradley fighting vehicles, which the US has also promised. And the Leopards in turn work with the fighting vehicles that Germany has said that they're going to send in. They work as its pairs and they support infantry on the ground. So overall, it probably is a big asset for Ukraine to have these things coming in.
Any sense of what the Russian response will be or has been?
Well, Russia has, since the invasion, said that certain types of weapons would be a red line for them and they'd retaliate. And we've seen them say that over and over again, and we've seen them not do anything really when that's happened. And so that the calculation really from Europe and the US is, well, we may as well send these heavy tanks in because the risk of a proper direct Russian retaliation must be low at this point. And certainly the risk of nuclear weapons seems to have faded, at least thankfully, for now. So they're taking that calculation that Ukraine really needs this if it's going to have any prospect of staving off an offensive and perhaps even regaining some of the ground that Russia has been occupying. And certainly they're willing to take that risk with Russia at this point.
Okay, it is a risk, it is a gamble, and it's been tortured getting to this point, but it's an important evolution in terms of where things stand between the US, of course, Germany and its allies on providing those tanks. Thank you very much indeed, of course, Bloomberg's Rosalind Matheson on the latest and how that story has evolved, the potential implications then for the fighting forces of Ukraine. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Shares in Adani Group companies are paring losses after the CFO denied allegations by activist investor Hindenburg. The short seller accused firms owned by Asia's richest man of, quote, brazen market manipulation and accounting fraud. Adani Group's CFO says the company has always been in compliance with the law and maintains the highest standards of corporate governance. Rupert and Lachlan Murdoch are abandoning plans to reunite their two media companies, Fox and News Corporation. Some investors had voiced opposition to the merger, saying it undervalued company assets. The deal, first announced in October, was widely seen as a way for Lachlan Murdoch to cement his control over the family media empire. The New York Stock Exchange says some trades will be declared null and void after a glitch caused wild price swings and trading halts in hundreds of stocks. The exchange says a system issue affected more than 250 stocks as trading started in yesterday's session without an opening auction price. Some of the biggest US firms, including Wells Fargo and McDonald's, were hit. Bank of America is rewarding the majority of its staff with a pool of restricted stock. The incentive, which comes on top of regular compensation, will go to employees who earn up to $500,000 a year. Bloomberg understands that around 96% of the bank's global workforce are eligible for the scheme. That's the Bloomberg Business Flash. Tom.
Laura, thank you very much indeed. Now to Pakistan, where the country's ousted Prime Minister Imran Khan says he's actually confident of returning to power this year. He told us the popularity of his PTI party has rattled every other faction in Pakistani politics.
The entire status quo, the entire political status quo is against me right now. So the 13 parties, they're all on one side and my party is up against them. And they're petrified because the reason why this assassination attempt was because they got scared of the popularity of our party. Since we were removed through a conspiracy, on the 9th of April. On 10th of April, never have so many hundreds and thousands of people come out all over Pakistan and protest. It's never happened in Pakistan. So they got rattled by that. Then followed series of our public rallies, which were unprecedented. But what really scared them were the 36 by-elections that took place since, and 75% of them were won by us. So 29 out of 36 were won by PTI. Despite, the establishment on their side, the election commission favoring them, the administration was on their side. So that's what has really rattled them. If you look at any survey in Pakistan right now, all the parties put together cannot compete with us. In the by-elections, 13 parties stood on one ticket against us. And as I said, 75% of the elections were won by us.
Pakistan's former Prime Minister Imran Khan there speaking in Lahore. Bloomberg News is seeking reaction from the Pakistan government to Khan's comments. Coming up, Tesla's $3.6 billion investment. The company plans new facilities to build electric vehicle batteries and its all-electric semi-truck in Nevada. We get more details and look ahead to the company's earnings. Those results are due later today. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Do you think today it's easier for a black entrepreneur to start a company, or no more easy than it was 20 years ago or 30 years ago?
If it were easy, you would see more Bob Johnsons, more Michael Jordan, more Magic Johnsons, and Oprah Winfrey's and the like.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Move over Microsoft. It's all about Tesla now. Tesla investing $3.6 billion in 2 new factories to build electric vehicle batteries. And it's all-electric semi-truck. You can see that on the screen now in Nevada. The investment comes ahead of the company's quarterly earnings. They are due later today. To get a preview then, Craig Trudell who covers global autos, joining us in the studio. Let's talk about the investments. Let's talk about the preview of the earnings. Let's start with the investments then. What is the rationale behind this for Tesla? What does it tell us about their appetite for expansion and the demand that they're seeing?
Yeah, we knew back in April of last year that Musk was talking about expanding their presence in Nevada. It was always the plan going in that this battery plant was going to be huge, right? That it was going to be bigger than anything in the world. And it actually has taken them some time to sort of live up to the scale of what they initially talked about for that facility.
Not for the first time.
Not for the first time with Musk. We're used to that, of course. And so, they've been trying to scale up some of their own batteries. It's still a little bit unclear just how much this will be Tesla making its own batteries versus working along with Panasonic, which has been their approach thus far. And obviously, the Semi is very interesting as well. Musk has talked about wanting to do 50,000 units of that next year. An analyst at RBC recently said he sees something more like 4,000. So we may see some more, classic Musk big promises with, questionable delivery on the other end.
Are we expecting big promises when we hear from executives later today on the back of the earnings? What are you and the team looking for within the earnings picture? What is going to be key for you?
I think it's a nuanced picture, right, where Tesla is doing record deliveries quarter after quarter. The problem is that they haven't been doing deliveries to keep up with all this new capacity that's coming on, and so the extent to which Musk can convince the street that these price cuts that they've done recently can really lift demand or have lifted demand, and that he can, sort of balance these supply-demand, dynamics without sort of, giving away the farm in terms of margins. They've had fairly strong profit margins that have surprised a lot of the doubters that didn't think that EVs were going to be viable. But, does he get to a point where, Tesla is back to, break even or even losing money in order for him to continue to grow at the rates that he's promised?
And that takes us to the price cut story. And I've heard and I've seen different responses to this. Pretty significant price cuts, China, the US, the UK here as well. Some saying that, look, this is a smart move. They're going to continue to build out market share. Others suggesting, yeah, there's going to be that margin squeeze. What's your take?
Yeah, I think there's no doubt there's going to be a margin squeeze there. The question is how much, they're able to sort of bring costs down and sort of offset that to some degree. In terms of their positioning, they absolutely are ahead of everyone else in terms of the amount of scale that they have in place to make electric vehicles and relationships with battery companies and some internal capabilities that they're attempting to get up and running. It's absolutely a question, though, of whether you're really not making friends with your current customers by slashing the heck out of their resale values. That is absolutely a big risk that they've taken.
Yeah, and you've certainly seen protests in China at some of the showrooms there on the back of those price cuts and not being afforded to those customers. Craig Trudell, always fantastic on the preview to Tesla. Thank you very much indeed. A redhead crossing the terminal now. Adani Transmission extending its slide to over 12%. Again, this is tied to the story. Hindenburg Research, 2 years of research, and they are claiming, and it is claims, that there is fraud at the Adani conglomerate. The CFO coming out saying they have the strictest corporate standards and they always abide by the law. That's just the latest on that evolving story. Adani Transmission, part of that conglomerate of Adani businesses. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kaylee Lines in New York, Anna Edwards here in London. European markets off by 0.6%. NASDAQ futures down a full 1%. This is Bloomberg.
going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I don't think we're heading here into a severe recession. I think, the business cycle dynamics are not late cycle. This is an early cycle economy.
It's all about picking stocks in this environment. If you look at CEO confidence in the economy 6 months out, it's at an all-time low.
The idea that this is all behind us in the economy, I don't think that's true at all.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. A warning from Microsoft. The company is forecasting a slowdown in both its cloud computing business and corporate software sales. An unprecedented strike today by Amazon workers in the UK. They're unhappy with the online retail giant's latest pay offer. And activist investor Hindenburg is targeting Asia's richest person. It accuses firms controlled by Gautam Adani of fraud and market manipulation, charges the company denies. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kaylee Lines in New York. Matt Miller is off today. A lot to discuss today, Kaylee, and one of those things is, of course, the tech sector, Microsoft, and what it had to say, weighing on sentiment as we head towards the US Open.
Yeah, you definitely are seeing that deterioration in U.S. futures. I would note it didn't weigh too much on sentiment in Asia overnight, but that may be because a lot of those big Chinese technology stocks were not trading today because China and Hong Kong are still closed for the Lunar New Year holiday. What was trading includes Japan, and stocks there were modestly higher, the Nikkei rising by about 3 to 0.4%. That may in part have had to do with the fact that the Japanese yen was weaker against the dollar earlier in the session, but it has actually gained back strength. It's now stronger by about 0.25%. Dollar yen trading at 129.81. Also stronger against the U.S. dollar. The big outperformer in G10 today is the Aussie dollar. It's stronger by about 0.6%, trading at just under 71 cents to the greenback. That is after we got Australian inflation data out overnight. It accelerated to the fastest pace in 32 years, suggesting that maybe the peak is not in, and bond traders have been underpricing policy tightening by central banks may throw some cold water onto that whole pivot thesis, and that is what you saw playing out in the Australian bond market as well, that two-year yield rising 10 basis points to 3.08%. Here in the U.S., though, the story is less about concerns around inflation and monetary policy and really more about earnings after that disappointing guidance on the cloud growth from Microsoft. So that is weighing on stocks across the board. We are right around session lows right now. S&P 500 futures down about 0.7% to just about the 4,000 level, 4,003 where we trade at the moment, but the real underperformance coming from NASDAQ 100, of course, very tech heavy. Those futures are down more than 1%. In other asset classes, meanwhile, it is more quiet. We're down just 2 basis points on the 10-year yield to 343, and then crude oil barely changed on the day. We're down less than 0.1% on WTI, right at $80 a barrel, Anna.
Kaylee, let's have a look at the European map. And while we do so, worth reflecting on those Australian inflation numbers, because for some people, this tells us that broader story may be about whether we've reached peak inflation. For others, other voices I spoke to this morning saying, actually, this stays in Australia and it doesn't have much global read across, but no doubt a conversation that will return. This is the European picture this morning. Negative, and increasingly so, actually. As Kaylee's been pointing out, the futures picture in the US looks weak, increasingly weak because of the heavy weight that Microsoft is applying, if you like, to sentiment within the tech sector, and that is increasingly pushing down European stocks. So we're down by 0.5% on some of these markets. Basic resources, one area of brightness, that's helping to lift or at least flatter the London market. Here's a European tech name that's in focus, ASML down by 1.5%. The numbers well received by analysts and the company reporting numbers that were better than had been anticipated, but there are still big concerns around tech broadly and indeed specifically around chips and chip equipment suppliers, as ASML is. To what extent are they going to be able to supply the China market? Still an open question. Talking about negativity around tech, this is a small Danish business, works in the IT space. That stock down by just shy of 20% after the company put out some numbers. They seem to disappoint analysts, and we saw some downgrades from analysts. EasyJet, though, reporting something very different. A lot of focus on consumer-facing businesses in the UK. How will they stand up through the winter, given the cost of living crisis? Have we seen, really, the intensity of the cost of living crisis, though, for consumers? And that's one of the questions that is raised when you look at what's happening with EasyJet. They're still reporting strength in their bookings trends, including for that important summer period, and so the airline goes higher by 10.5%. The euro down at 108.78. It has been over 109 earlier on this week, Kaylee, as we talk about whether we'll see multiple 50 basis point hikes from the ECB, of course. The data point today was around the IFO, and it really did come in to support, essentially, what we've been hearing from a number of other names, including now the German government. Expectations are fading that the German economy finds itself in a prolonged recession this year.
And the soft landing chorus and data that seems to support it just continues to grow louder, Anna. Now let's return to our top story of the day, what is really defining the market action in terms of risk sentiment here in the U.S., a downbeat forecast from Microsoft. The software giant says revenue growth in its Azure cloud computing business will decelerate in the current period, and it warned of a further slowdown in corporate software sales. Bloomberg's April Roach is joining us now for more. So April, we know that the tech sector and growth in it has slowed broadly. Microsoft clearly not faring well as that goes on.
Yes, so Microsoft reported a second quarter sales gain of 2%, which was expected, and this was the smallest increase that the firm has reported in 6 years. However, its profit did beat analyst estimates, and this was helped by the strength of its Azure cloud services business. And we've really seen how these big tech giants like Amazon and Meta have struggled a bit in a kind of slowdown period, which comes after a surge during the pandemic. And many of these companies have said that they are taking measures to adjust in this period.
Yeah, absolutely, April. That's the story then around some of these big tech names in the US, which we continue to focus on. We also got numbers out from where you are, from ASML, the major supplier to the chip sector. The numbers didn't seem so bad, but the stock falls. Tell us some of the details.
Yes, that's right. So ASML's sales forecast for the first quarter of the year beat analyst expectations. The company was able to maintain its long-term revenue guidance while also providing an outlook for 2023. It sees a sales growth of more than 25% for the year compared to 2022. And as you said, you know, the stock is down slightly, which could be on the profit look, which analysts might have been expecting to be a bit more positive. But regarding demand for ASML's advanced Advanced Machinery, the Chief Executive Officer, Peter Wennick, said in a transcript of a video interview that while the firm does face challenges regarding a potential recession and inflation and geopolitical tensions, the demand is still much higher than what they can make.
April, thanks very much. Bloomberg's April Roach with a focus on US and European tech. And in fact, let's keep with the tech-related news. Amazon workers in the UK are going on strike for the first time ever. Bloomberg UK correspondent Lizzie Burden has been on the picket line with strikers this morning. The strike organizer telling her the walkout is about more than pay.
This rise isn't going to impact how Amazon does business. What it will do is actually start to bring some of that money that Amazon generates back into the economy. These workers are going to spend all of those wages in the local area, actually bringing profits back into it. Amazon doesn't do that. This is about trying to build sustainable jobs and actually jobs that these workers really can value.
Lizzie Burden joins us now from Coventry in the English Midlands. What's the latest where you are then, Lizzie?
Well, Anna, you can see the union set up camp outside the entrance to the Amazon warehouse. It's stopping workers on their way in, asking if they want to join the union, join the strike. They're expecting at least 300 workers to join today, and they're asking for a 50%, 50, raise to £15 an hour. They say the workers need it to deal with the cost of living crisis. They say they deserve it because they've grafted through the pandemic, and they say that Amazon can afford it because it only paid £10 million in tax in 2021 on about £200 million of profit. That's their argument. Amazon, though, says it's very proud of the wages it pays. They're competitive. They're above the national living wage. The union says that's nothing to brag about and that it's going to continue strike action potentially in the coming weeks and months if Amazon doesn't come to the table. But remember, Anna, Amazon has its own issues. It's dealing with people going back to their pre-pandemic spending habits, and it's also having to cut 18,000 jobs, the biggest cull in its nearly 30-year history. It's closed already it's closing 3 warehouses, opening 2 others. Amazon too has its issues.
Well, Lizzie, speaking of issues and how broad they may be, this is not the first time we've been speaking with you about strikes in the UK, but largely that has been a conversation about the public sector. How significant is it that the strikes are now spreading to the private sector?
Indeed, Kayleigh, we've seen chaos across the public sector, from healthcare to transport to teaching to the civil service, and it is significant that it's now spread to the private sector because it shows the discontent has grown. But it's also significant economically because it gives new meaning to the idea, the warnings of a wage price spiral. We've seen persistently, stubbornly high inflation in the UK, wage growth at its fastest on record in November outside the pandemic. The difference between Amazon and the National Health Service is that Amazon could raise its prices to cover a bigger wage bill. However, as you heard from the union boss there, they think Amazon's got the margins to absorb a bit of a pay rise.
Lizzie, thanks very much. Bloomberg's UK correspondent Lizzie Burden at the Amazon warehouse in England. Now, shares in Adani Group companies are dropping after allegations from an activist investor, Hindenburg Research. The short seller accuses firms owned by Asia's richest man of, quote, brazen market manipulation and accounting fraud. Adani Group's CFO says the company has always been in compliance with the law and maintains the highest standards of corporate governance, denying all of those allegations. For more, let's bring in Bloomberg's Sanjay PR in Mumbai. Sanjay, what are the key allegations from Hindenburg's research? Of course, we've mentioned that Adani denies all of this, but what is it that has been said that is weighing on the shares?
So largely there are 2, like account manipulation and fraud. The allegation is saying that the conglomerate, the port power conglomerate, has created shell companies from countries like UAE, Caribbean islands, and Mauritius, and that has led to tax theft, corruption, and money laundering, etc. These are the charges alleged by the U.S. research firm. But Adani CFO had denied all this allegation, and they also said that the timing of this particular report is today, which is Adani Group's flagship company, Adani Enterprises Limited, is launching a follow-on issue, which is India's largest follow-on issue. So the timing is he has also criticized the timing of this particular research report and the follow-on issue. So and the stocks has not reacted to that largely towards that, because by then the CFO has intervened and has made these kind of statements towards investors.
Yeah, on that point, the CFO said that the timing clearly betrays a, quote, brazen, malified intention to undermine and damage the share sale plan. So what happens next with that?
So the next important thing would be the FPO, because FPO opens today, and FPO is going to be the largest in the country. What we pick up from the company is that they are getting a great response from sovereign funds like IHC, Mubadala, ADIA, and others, and of course Indian domestic financial institutions such as LIC, Life Insurance Corporation, and other domestic financial institutions are also very keen to invest in this follow-on offer. So they are saying that this timing could be wrong, but they are believing that this follow-on issue of Adani Enterprises Limited will be a resounding success. We will have to wait and watch for more further stock exchange disclosures on the bids received from these financial institutions across the world.
All right, Bloomberg's PR Sanjay in Mumbai, thank you so much for your reporting on this. So we know the stocks tied to Adani are on the move today. Let's also take a look at some stocks on the move here in the U.S. And I actually want to begin with News Corp, which is one of the few outperformers on a day when most stocks are lower. Rupert Murdoch yesterday saying he is abandoning plans to pursue a remerger between News Corp and Fox Corp. Of course, News Corp investors had been pushing back rather publicly against that, saying it undervalued the assets of the company. So they seem to be cheering the idea that that plan is no longer going to go forward, because News Corp is up about 4.5% before the bell. A lot of other stocks moving lower, though, and that includes Amazon. And partly this is part of the broad sell-off we are seeing in technology. But remember, Amazon is becoming more and more reliant on the growth driver that is AWS, its own cloud computing business. So the idea that Microsoft was out yesterday talking about slow growth in its own cloud computing business going forward has a negative read-through for this company. So that stock is down about 1.9% before the bell. And there's a lot of other stocks moving lower as well, many of them tied to analyst recommendations and specifically analyst downgrades. Sunrun got downgraded at Barclays. It's down 3.5%. Block was downgraded at Oppenheimer. It's down 4%. Enphase Energy getting a downgrade as well from Piper Sandler. So that stock is down about 3.9% before the bell, Anna.
Okay, certainly those having an impact then. Coming up on the programme, we'll get back to the big tech themes then. Kaylee, more on Microsoft's results with Walter Todd, Greenwood Capital President and CIO. He joins us to talk about what we've learned on costs in the tech sector, any clues around CapEx, what will other cloud companies manage to achieve given what we've heard from Microsoft. And forecasting a recession has never been trickier, apparently. Today's big take story dives into why traditional economic indicators may not be as reliable as they were in the past. Look for that online or on the Bloomberg terminal. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kaylee Lyons in New York. Matt Miller is off today. Now, options markets imply we are past the peak in volatility for fixed income assets. Our markets reporter, Valerie Teitel, is here to discuss and to give us a sense of what this means for broader risk-taking in markets. Valerie.
Yes, Anna, I think this decline in fixed income volatility especially is really going to spur a further risk-on mood this year, and I'll tell you why. We are now well past the peak in fixed income vol. I've got the MOVE index here in blue. That is a measure of implied volatility in the Treasury market. Now, it's peaked, and it peaked just over 90 days ago, and I'll tell you why that's important. Most banks on Wall Street, most asset managers, they have these VAR models, these value at risk models. The main input into that is 90-day historical volatility. So as that historical volatility starts to roll off, their portfolios start to look less risky, and what does that spur them to do? Move further out the risk curve, go into equities, move into more risky assets with juicier yields like EM bonds. So this is a main reason why I think we're not done yet with this risk-on move that started in January.
Okay, Valerie, thank you very much. Bloomberg's Valerie Teitel with the link between volatility and risk-taking and why one could follow the other. Joining us now, Eddie van der Veld, Bloomberg Markets Live editor. Eddie, interesting thoughts there from Valerie around risk-taking, and I wonder how this ties into broader themes around recession, because I know that's been firmly on your radar. We have this big take story out today talking about how difficult it is to read the tea leaves on recession. There are many models mentioned in that story, the SARM rule for one, and that's an example of a model that's not really giving us any clear clues right now.
Yeah, and you know what, Valerie makes a really good point about the markets reacting to this, but the Fed, of course, is going to react to that, to this dip in volatility too, because they look at financial conditions. And markets, at the moment, there's a really big feedback loop between what's happening in markets and what's happening, you know, with central bank policy, because as financial conditions ease, the Fed becomes less likely to cut or to soften their stance, and that again feeds back into markets. So it's a really interesting situation in markets. With regards to the economic indicators, I think we've got to separate the echoes of the pandemic and the previous recession from the readings that we're getting that are really truly forward-looking, and I think that is what's messing with people's models at the moment. We are just coming out of one of the shortest recessions we've ever had, and that is going to have, that causes these sort of these echoes that are playing forward.
Okay, Kaylee.
Well, Eddie, if we're coming off of the shortest, sharpest recession we have had, it raises the question of if we still will have a recession this time around. And if you look at the yield curve, which is still inverted by 71 basis points on 2s10s, that would signal that, yes, it's coming. How do we think about those clues?
Kaylee, absolutely. The yield curve is one of the really big one, because it has almost always been right. The problem with the yield curve this time around is that very high inflation that we have, right? And if you assume that inflation is going to be much higher, or is much higher now than it is going to be in a year's time, then it makes sense for rates also to be very inverted and to say that rates right now is much higher than they are going to be in the future. So I do think that there is a lot of separation. We've got to look at the economy economy on a much more objective basis than purely looking at the data. I think we've got to look at what the jobs market telling us that that the economy is strong, or is the jobs market telling us that the economy is rebalancing? And I think the latter is much more accurate.
Okay, Eddie, thank you very much. Eddie van der Veld at Bloomberg Markets Live. Big Take is the function to use on your Bloomberg terminal if you want to see more on that Big Take story. You also find the Big Take podcast on there as well. MLIV Go is the function if you want to get more from the Markets Live team, of which Eddie is a part. You can find that on the Bloomberg terminal. This is Bloomberg.
Do you think today it's easier for a black entrepreneur to start a company, or no more easy than it was 20 years ago or 30 years ago?
If it were easy, you would see more Bob Johnsons, more Michael Jordan, more Magic Johnsons, and Oprah Winfrey's and the like.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Anna Edwards in London. Matt Miller is off today. Now, keeping you up to date with news from around the world, here's the first word. Ukraine will soon get a powerful new weapon to use against Russia. The U.S. and Germany are set to announce they'll provide their main battle tanks. The Biden administration will offer the M1 Abrams, dropping the argument that it guzzles too much gas and is difficult to operate. And Germany is expected to send 14 Leopard tanks. The hope is the tanks will let Ukraine punch through the Russian lines. Bank of America is rewarding the majority of its employees with a pool of restricted stock. It's an attempt to retain workers in a gloomy economic environment. About 96% of B of A's global workforce is eligible. It's the sixth time the company has offered such stock awards. Rupert Murdoch is dropping plans to recombine Fox and News Corp. In a letter to both companies, he said that combining the two media giants that he controls isn't optimal for investors. The controversial deal aimed to reunite the parents of Fox News and the Fox broadcast business with the print operation that includes the Wall Street Journal, the New York Post, and HarperCollins. And the New York Stock Exchange is canceling some trades after a glitch during yesterday's open. Hundreds of securities began trading without an opening auction price. The NYSE didn't elaborate on what it called a system issue or what it may cost. Quite a mystery there. Well, coming up, we will turn to the broader markets and talk Microsoft with a shareholder. Walter Todd of Greenwood Capital will join us. This is Bloomberg.
Successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A warning from Microsoft. The company is forecasting a slowdown in both its cloud computing business and corporate software sales. An unprecedented strike today by Amazon workers in the UK. They're unhappy with the online retail giant's latest pay offer. And activist investor Hindenburg is targeting Asia's richest person. It accuses firms controlled by Gautam Adani of fraud and market manipulation, charges the company denies. I'm Anna Edwards in London with Kaylee Lyons in New York. Matt Miller is off today. And Kaylee, we're getting towards the start of US trading, of course, some way through the European trading day. Sentiment fading as if the negativity around big tech is sticking.
Yeah, and that negativity seems to be growing as the future session grows older, Anna. We've been down the whole time, but we are right around session lows now, and really those losses are being led by tech-heavy indexes like the NASDAQ 100. S&P 500 futures, for their part, are down only by around 0.8%, but NASDAQ 100 futures are down by substantially more, about 1.2%, and that is something, as I said, that just continues to build momentum as we grow closer to the opening bell, which is in about 4 hours' time. In other asset classes, it is more quiet. The 10-year yield down about 2 basis points to 3.43. Oil's doing pretty much nothing. It's down less than 0.1%. WTI hanging out right around $80 a barrel. It really is an earnings-driven story for U.S. markets today. So on that note, let's talk about Microsoft. As Anna said, they are warning of slowing growth in the cloud computing business, and that really turned things around for this stock, which initially gained after its results because they were better than feared. The forecast, though, perhaps worse than feared. So that stock is down about 2%, and it's dragging on some of its peers as well, like Amazon, which of course operates that giant AWS cloud business of its own. Not a great read-through for that company. That stock is down about 1.7%, and of course Amazon will be reporting its own results next week. Interesting to see Texas Instruments not trading at this point in the pre-market session because it too reported after the bell the slowest sales growth going back to 2020, and the guidance also was pretty tepid, so really speaks to the slowdown one of the largest chip makers is feeling at the moment. And then Tesla will be reporting after the bell today. A lot of questions swirling around about demand for those cars. Also the man himself, Elon Musk, who runs this company, Tesla stock down about 1.6% ahead of those results, but of course that is just part of the broader deterioration we are seeing in big tech stocks this morning, Anna.
Yeah, absolutely. The sentiment around big tech certainly evident there then, Kaylee, and certainly evident here in Europe as well. We're down by 0.7% on the stocks Europe at 600. In fact, it's quite broad-based. Technology is one of the sectors that is under pressure. Telecoms, financial services also feeling the pressure. In fact, only one or two sectors in positive territory through much of this morning's session. The basic resources sector was one that was underperforming yesterday, so outperforms today. ASML is a sort of European expression of that tech nervousness, Kaylee. We're down by 1.8%. There's the broader stories around tech, but there's also what we heard from ASML themselves. The numbers themselves not that bad, better than expected on a number of levels and well received by analysts. Some questions though as to what this business will look like if they do have to stop supplying some of their big lithography machines to China. That is what they make. They supply the makers of chips. EasyJet from the aviation sector down by 9.5%. A lot of focus on how resilient these kinds of consumer-facing businesses can be in Europe as consumers deal with all of the headwinds they're being faced with. But quite resilient so far is the message coming through from EasyJet, where they say that bookings are resilient into the second quarter and crucially then into the summer. And so the stock, a little bit of relief there, up by more than 9%. And the euro fairly flat this morning, 1.08. It has been above 109 as we continue to track the ECB story. The development, though, this morning has been around a German sentiment, and that number coming through from the IFO Institute pleasing some, and so reinforcing the sentiment that perhaps we're getting better data out of Europe, Kaylee.
All right, so perhaps better economic data, but not necessarily better corporate earnings or corporate guidance at the very least. Let's get back to the Microsoft story as that tech giant issued a downbeat forecast regarding its cloud business. Joining us now is Walter Todd, President and CIO of Greenwood Capital. Microsoft is one of his top holdings. Walter, good morning. Thank you for waking up early for us. How are you feeling about that Microsoft position this morning?
Yeah, well, we do have a position in Microsoft, but we're about 50% underweight the index. Look, I think Microsoft's a great company that's not a really good stock at the moment. And really, if you think about the call yesterday, it was kind of two separate calls. Satya Nadella had you kind of dreaming about the future and the new platform of computing and AI, and then Amy Hood, the CFO, came on and kind of slapped you in the face and gave you the outlook. Again, it's all about expectations. They're still growing the cloud business in the low 30% rate, but that's down from 38% the past quarter, and it's down, from over 40% a year ago. And they were quite honest and upfront about what they're seeing in terms of spending, customers being more conservative given the macroeconomic uncertainty, and they saw a slowdown as they exited the quarter. And I think that's what really has the stock down this morning a couple of percent.
So, Walter, this is a company that was growth and is not growing to the same degree anymore, and I wonder how that translates to other companies like it, other stocks that you hold in your portfolio, the likes of Apple and Alphabet that we have yet to see results from. How close do you think the correlation or the read-through is for other big tech names?
Yeah, I think I think it's probably consistent with what we're going to hear from other companies. And really, this has been, a story for the past, really 12 months plus of the top of the market underperforming the average stock. And so when you look at our portfolio specifically, we're underweight tech, we're underweight the top of the market, and have, a lot of weight in, some smaller names relative to these mega cap names. So I think it's, a consistent theme we're going to be hearing as we move through earnings season from these larger companies. And, I think the stocks are going to continue to be a little bit challenged here.
Walter, good morning to you. Yeah, last year was all about valuation, wasn't it? About a rising rates environment and what that does to the value of big tech. Is this year going to be about concern for top-line demand? I mean, what do you make of expectations for how much companies are going to spend on tech products? We heard from Microsoft on this front. We've also heard from a number of European corporates raising questions about CapEx and whether companies are going to have the appetite.
Yeah, I think spending on technology is as Jamie Dimon would say, is kind of, you can't sacrifice that. It may slow, but they're going to continue to spend. And I think that's what you heard the message from Microsoft is customers are trying to do more with less. Technology helps them do that. And I think what you're seeing from these big tech companies and other areas of the market as well is people are right-sizing their cost structure. So Microsoft talked about that last night, and we heard about laying off some people, right-sizing their cost structure to align with the slower revenue growth. And I think we're continuing this process of reevaluating valuations given the prospect of rising interest rates and slowing economic growth. I think investors were quite euphoric here to start the year as they think about the prospect of the Fed stopping raising interest rates, which is great, but now we have to shift our attention to the future and potentially slowing economic growth as we move through 2023.
Yeah. And Walter, we've seen some positive stock reaction to companies that announce layoffs, and you can understand why that happens from a margin perspective. But for how long does that remain a kind of good news story, if I can put it that way? Obviously not good news for the people who are laid off, but in terms of the market's perception of it.
Yeah, I think that's a short-lived reaction. And I think, as companies continue to move through the course of 2023 and we get further down the road, I think it's going to come back to, what is the revenue growth outlook and what is the kind of economic backdrop for that. So I think the cost cuts can only get you so far. You can't cut your way to prosperity, and then we're going to have to see some reacceleration in revenue. But unfortunately, that might be a 2024 story, not a 2023 story.
Okay, so for that 2023 story, when we're thinking about corporate earnings, top line and then bottom line as well, Walter, has the bar been set appropriately, or are expectations still too high?
Yeah, I think for the current quarter, I think expectations were somewhat subdued when we started the year, and then we had, pretty big rally heading into earnings, so that bar may have been raised a little bit. I still think earnings in aggregate are probably too high for 2023 and need to come down. They've come down for the S&P from around 252 to around 227 right now. That probably needs to go further down to maybe 215, something of that nature. So I think there's continued earnings risk as we move through the year.
Okay, and what do you make of, going back to Microsoft specifically, we've seen this business, of course, they operate in a number of areas of tech, and one of those areas is gaming, and they have these ambitions towards Activision. What did you make of the comments they made there? I mean, how much sense does it make that is still part of the business?
Yeah, it's a real head scratcher for me, honestly. I mean, when you look at the trends in gaming and Xbox specifically that they reported last night and they were really seeing for the past number of quarters, I don't understand why they're continuing to pursue Activision, honestly, especially given the out with the lawsuit. It seems like they could use that as a means to step away from that deal, but they indicated last night they're intent on closing that transaction.
Walter, thanks so much. Thanks for joining us. Walter Todd of Greenwood Capital with us to talk about tech. And while we were having that conversation, some headlines dropping across the Bloomberg terminal, which we should get to right now. Red headlines telling us that Germany has confirmed it will send Ukraine 14 Leopard battle tanks, this being described as a first step. Germany also will allow allies to send Leopard tanks to Ukraine. This crucial because Poland had specifically outright asked whether it could do that. It needed Germany's permission to do that. We'll wait for further details on the U.S. side. There's been talk about the U.S. being poised to send Abrams tanks as well. We'll see how that goes down. The Kremlin warning that tanks that are sent by allies to Ukraine would be, in their words, destroyed on the battlefield. So we'll keep that in mind as well, the Kremlin's response. That breaking news just being confirmed right now. This is Bloomberg.
the innovation agenda is going full speed on mitigation. That's where, you know, there's 100 companies, Breakthrough Energy's funded. There's
by mitigation, you mean mostly energy. You mean everything to do with energy. You mean generation of energy. You mean batteries. You mean transport. You mean all of the new, and there's some renewables that are already traditional, but more that need to come out. So that's the package that you're talking about mitigation? Yeah. Or are you also talking about agriculture as mitigation?
Yeah, so every area of emissions, you know, the world tends to focus on passenger cars and electricity. That's not a third of emissions. And so the focus on the easiest third, you know, now 4% of new cars are electric, you know, so that's the field that we're furthest along. About 4% of energy generation is wind and solar.
Moment news breaks. No one covers the world like Bloomberg.
The return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition with Kaylee Lyons in New York and I'm Anna Edwards in London. Just getting breaking news coming through from Berlin. Germany has agreed to supply Ukraine with 14 Leopard 2 battle tanks. They will also allow allies to send Leopard tanks to Ukraine. Let's get further details. Rosalind Matheson joins us, Bloomberg Senior Executive Editor for Government, with details. And Ros, good morning. This seems to be, as expected, I suppose, in the last 24 hours at least, the pressure building and building on Germany to come to this conclusion.
Well, that's right. We've seen pressure for weeks on Germany from Poland, from other countries in Europe, because they can't send the Leopard tanks that they have in their stores until Germany gives them the right to do so under re-export laws. So they're sitting there. They wanted to go. They had to get the go-ahead from Germany, and they were saying that time is running short to be able to get these tanks to Ukraine, to get Ukrainians trained on how to use them also, because they are very different kinds of tanks if they're going to make any measure of difference in the coming months. And it's possible either way, the timeline for this still will be weeks, if not months.
So, Ross, to that point, as you say, this took a long time. It was difficult to accomplish. What is the broader signal here about that difficulty and what it says of the resolve and unitedness of the allies and whether that's fraying?
Well, certainly you've seen a huge amount of unity and support for Ukraine from Europe, from the US and elsewhere, and really a lot of aid that's gone in over the past 11 months, be it financial aid or military aid. What you see is sort of a staggered level of caution, and not just Germany, but other countries too, about if you send really offensive heavy weapons into Ukraine, does that put NATO in the firing line directly with Russia? Is that seen as a direct challenge to Russia? And does that pull those countries into a conflict that, you know, is contained inside Ukraine? And that's been Germany's concern, and other countries also. But equally, you've seen other countries in Europe saying Germany has just been far too cautious, especially in the past few weeks.
Yeah, and any response from the Kremlin, of course, will be closely watched here. I suppose, talking of unity then, Germany has always made the, well, some voices in Germany at least have made the argument that they didn't want to do this alone, and maybe they like the cover of other NATO members, for example, the US, sending their own tanks. We'll wait to see if we get confirmation on that, because at the moment that's just our sources suggesting that'll happen.
Well, that's right. It's interesting, though, that we are hearing that the US will commit to sending Abrams tanks. Those are the very heavy US battle tanks. That could take even longer, by the way, to get there. But the suggestion is that Germany was making very clear to the US, if we're going to send ours, you need to send yours, because the US was resisting sending these very big, heavy battle tanks from there. And so perhaps there's been that conversation behind the scenes, which is we really have to do this together. If we're going to make this commitment, so do you. So you can imagine that's what's really happened in the past few weeks, is that negotiation. So we are expecting a potential announcement on Abrams, as you said, later today from the US.
And we'll await that. But can we also, Ross, just get a sense of what the war is looking like on the ground now? Ukraine obviously wanted these tanks as they prepare for potentially a fresh offensive from Russia once the weather changes. What are you hearing about what the scene actually looks like?
Well, what we've seen for weeks is things are very, very bogged down on the ground. Neither side really making much progress at all. We're talking like meters, if anything, and one or two small towns that are changing hands. And really, as the weather changes, we get through winter, there's the moment where either side could really launch an offensive. Russia may make another fresh push to try and regain some territory. Ukraine equally will resist that and try and reclaim some of the territory it's lost. So they're on the clock here as the weather changes, as the terrain changes. The reality is, though, that these tanks could take months to come in, and by then we could have really seen the situation change on the ground. So the question is, at this point, would they come too late?
Ros, thanks very much. Thanks for the update. Rosalind Matheson joining us there, Executive Editor for Government, with the latest on the supply of tanks to Ukraine. Coming up, Tesla's out with earnings later today, so we'll get back to the corporate news and the business reporting cycle. We'll preview what to expect next. This is Bloomberg.
Brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Anna Edwards in London. Matt Miller is off today. Now a look at what is coming up for the rest of the day. At 7 a.m. Eastern Time, German Chancellor Olaf Scholz will be speaking in the Bundestag. And of course, that follows the news, the confirmation that Germany will be sending Ukraine 14 Leopard battle tanks in what it calls a first step. It will also allow allies to send Leopard tanks to Ukraine. Then also happening at 7 a.m., we will get data on U.S. mortgage applications. Then at 10, it's Canada's rate decision. The central bank is expected to raise rates one more time. And finally, after the bell, we're going to get earnings from another tech giant, Tesla. Will be reporting, Anna.
Yeah, absolutely. Now for a preview of Tesla's earnings, we're joined by Craig Trudell, Bloomberg's Global Autos editor. Craig, good morning to you. So the focus, as always, on the pace of delivery, on demand, on profitability. What will you be watching for?
Yeah, I mean, this is going to be one of the more interesting ones that I can think of in quite a while, right? They ended the quarter at Tesla really with a lot of signs of demand not meeting expectations, both their own expectations and what the street was hoping for. They were cutting prices, they were cutting production. The question now is these price cuts that they've made in the last few weeks, really substantial ones in China, in the U.S., and Europe. How much have they sort of, helped demand back up?
Yeah.
And, will demand get to, all of this capacity that they brought online last year?
Well, it may help demand, Craig, but I can only imagine it will hurt on the margin side and hurt profitability. How much have expectations of that been lowered?
Yeah, we've seen EPS for the fourth quarter, drop back to like April levels, right? And so consensus really came down quite a bit. I think, forward consensus is also, coming down an awful lot for 2023. The expectation being that, Musk has said he's willing to compromise in terms of profit margins, perhaps even, bring Tesla back to where it's, just breaking even, and maybe even losing a little bit of money. He's willing to do that if it means growing at the rates that they've talked about. He really, talks about this idea of, wanting to dominate, wanting to one day get to 20 million units. I think a lot of people in the auto industry sort of, really look askance at a number like that, but this is the long-term ambition of this company.
Well, Craig, let's talk about Elon Musk, the man, then, because the Musk factor, in some sense, is unquantifiable. That doesn't going to show up on the P&L. And we were just hearing from Musk over the last 2 days as he testified in a trial of a securities fraud lawsuit relating to his funding secured tweet back in 2018, taking Tesla private at $4.20 a share. And that is far from the last time over the last 5 years that he has made a lot of noise on Twitter and with his acquisition of Twitter. Is he going to be on the call today? I mean, what is going on inside Tesla in regard to faith in Musk's leadership?
I think that's another reason why this is going to be one of the more intriguing earnings sessions for them that I can remember. The amount of activity that's transpired since their last earnings call, that was around the time that he was closing the Twitter deal. The activity since then, it's really difficult to keep up. The many controversies and mistakes that he's made since then. And so, I do expect him to face some questions about his handling of the Twitter situation, the extent to which he's exposed Tesla investors in the course of all that, and, what he's going to do going forward to kind of, put Tesla investors at ease and assure them that, his eye is on the ball and Tesla's going to get back to the sort of execution, people sort of, got to take for granted when this, company was rising in valuation.
Thinking about focusing on execution then, Craig, how will other projects go down with Tesla investors? So even within the business, there are other things happening like Cybertruck development or in-house battery cells. All of these have the potential to maybe be successful, but also to distract. How are those going to go down?
I think you hit the nail on the head in terms of the two that I'm most interested in. Cybertruck, just how much volume can we expect for that this year? It's very much behind schedule. I think there are a lot of questions about, just how divisive that the design of that vehicle is and how much of a market there is for that model. And with the batteries, they just announced a big investment in Nevada overnight. How much of the batteries that are coming out of the new facility or the expansion of their complex in Nevada, is going to be batteries that they make in-house and sort of, deliver on some of the promises that Musk made a couple of years ago at a Battery Day event that got everybody excited.
Okay, Craig, thanks very much. Craig Trudell joining us there with a focus on the auto sector. And that's interesting, isn't it, thinking about whether they make those batteries in-house, Kaylee, because that make or buy decision, clearly at the heart of many boardrooms right now, as we've come through a pandemic with many supply chains tested, a lot of businesses focusing on that. But that's just one of the things we'll be watching for then in these earnings from Tesla.
Yeah, there's going to be a lot to watch for in the earnings themselves and also the commentary on the call, Anna, because this has been one of the stocks to watch. It's down about 1.4% in pre-market trading. I do wonder, though, how much that is in anticipation of the results and how much that is just part of what we're seeing broadly with these large cap tech names after Microsoft. That is what is dragging on the broader market as well this morning.
Yeah, absolutely. NASDAQ futures now down by 1.1% as we continue to digest what we heard from Microsoft. Interesting conversation earlier about the extent to which this negativity weighs on others that provide cloud in the sector and the extent to which it doesn't. We had an interesting conversation on Microsoft earlier.
Yeah, and that's going to be a question when we await more big tech results, like from Amazon, which of course is a giant in the cloud with AWS. It's going to be reporting on February 2nd after the bell, I believe. So Microsoft was really just the first out of the gate, Anna. We have a lot more of these to go, and we know given the weightings of these companies as they go, the broader market tends to go with them.
Absolutely. We've got tech this week. We've got big tech next week, of course, as well, along with the Fed. A lot of people wondering which is going to be in the driving seat in terms of sentiment. That is it for Early Edition. Surveillance is ahead. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
We're seeing upside surprises in the data.
The thing that we don't have is global growth.
You need to be data dependent. You need to see whether these dynamics actually play out.
The idea that this is all behind us in the economy, I don't think that's true at all.
It's far too early to say that recessions won't happen as a general rule. I think actually all the pain is probably still to come.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow in London and Lisa Abramowitz and Tom Keene in New York. Welcome on radio and television to Contraction. What is it, Wednesday? Contraction Wednesday?
It's Contraction Thursday, I think. I think the GDP report comes out. Yeah, exactly.
Report, but the bottom line is GDP comes out today. It's going to be a good number, and that's it.
Well, again, we got 7 straight months of below 50 reads in the PMIs that we got yesterday. So what does that say in terms of what the growth is and whether that's already baked in?
It's an odd terminal screen today. Let's talk the data check, folks, before we go to John Farrell with a really important question in London. Yeah, futures negative 28, Dow futures negative 169, VIX under 20 shows some good news. But in the bond space, as they call it, it screams economic slowdown today. The real yield in, and look at the 2-year grind that we're seeing right now.
And this follows an auction yesterday that was actually important because it highlighted how much demand there was for the short
what
end
does that signal?
of the Treasury curve.
It drives me nuts. We're going to stop the show now and say, why did that auction matter?
It matters because it gives you a sense of whether people see value in the short end of interest rates at a time when some people are saying the Fed's going to have to go much further than a lot of people believe. So people are basically calling the Fed's bluff and saying, we see value there, we're going to go there. And to me, that's interesting and tells you the mood and how much people are willing to push back against the
Dollar churning. Jane Foley with Rabobank will be with John Farrell in London coming up here. And I'm looking at the 2-10 spread really got down, not to negative 80 beeps, but has come back this morning is the 10-year inflation-adjusted yield. Talk about space. It's in a new space, and it's a space of disinflation.
Disinflation seems to be the theme, although overnight we got a read from Australia for the last quarter of the year that inflation actually accelerated to the highest level in decades. So on one hand, yes. On the other, if you think about some of the economies that are most affected by China's reopening, are we getting a sense that perhaps things are starting to plateau at a higher pace?
Tesla this afternoon, we'll underplay that. But Microsoft yesterday afternoon, I think we got to drive that story forward. Up it was at 4 p.m.-ish, 5 p.m.-ish, and it ebbs away today on a little bit of Azure concern.
Well, basically, their actual returns, their actual results were above expectations, but it was all about the guidance. And looking forward, the possibility of cloud computing and the growth there falling by 4 to 5 percentage points or 3 to 4 percentage points, still at a very high pace, but just concerns there about things coming off.
Futures negative 30. I want to get this, Lisa, and dash to the brief if we can. I really want to make clear we're seeing movement in the bond market that you need to focus on with the economic data today. The 2-year yield comes in 6 massive basis points, 4.15%. The 3.50 10 years now, 3.43. Even the 30-year bond plays in a bit, 3.59%. Inflation-adjusted yield, the one I look at, 1.15%. It would be shocking to see a 0.99% 10-year real yield. Lisa, we're not there yet.
Fighting the Fed seems to be the theme. Today, what I'm looking at, 10 a.m., we get the Bank of Canada rate decision, followed by an 11 a.m. press conference. This is interesting. Bank of Canada was ahead of the curve in terms of raising rates faster than other central banks last year. Are they going to be ahead of the curve in dropping down the pace of how much they hike rates? We have seen those 2-year yields over in Canada also plateau. 1 p.m., more auctions, U.S. selling $43 billion of 5-year notes. I do take a signal from how much demand there was yesterday for that 2-year yield. Do we get the same kind of read-through for this auction? And the earnings grind. Really, I can't say enough about how much the entire schedule this week leading into the GDP report tomorrow will be about earnings. Microsoft shares lower by 2.3%.
Really ebbing away.
Ebbing away after delivering strength in the actual earnings, but the guidance, everything. Today we get Tesla and IBM after the bell to continue with some of the tech. And before the bell, we're watching for Boeing, Hess, Freeport-McMoRan, and Kimberly-Clark to get a read on toilet paper.
What we're doing, well, it's going to be interesting. We're going to watch some of those off the headlines, if you will, earnings report. We're also going to get a read on what's going on in London. Farrow starting the day, he's up at the crack of 10 a.m. I mean, that's, you know, it's R&R for John Farrell in London. He's got one of our favorite guests with him this morning. John, what do you have?
Hey, Bram, I'm not shaving. Yeah, I might leave this the whole week. I am waking up at about 6. I'm having a nice breakfast, going to the gym, seeing family, seeing friends. I'm making a good time of it.
I'm so jealous.
We're missing you, TK. We're missing you. Let's set the stage. Let's set the stage. We come into 2023. The consensus is pretty clear. The first half's going to be tough. We've got to pay the bill for the tightening of the last 12 months. Got it? Second half's going to be better. You get a recovery. The year starts, boom. Everyone's wrong. The Nasdaq 100's up about 8% year to date. The Stocks 50, the Euro Stocks 50 here in Europe is up about 9% year to date. Max Kentner of HSBC said, get on board. Max joins us now. Max, I have to say, once I knew I was coming to London for a week, you were the man I wanted to catch up with. That note from a couple of weeks ago, and I'll share the quote with our audience just in case they missed it. So you're bearish the whole of 22, super underweight, max underweight. Then you said this to start 23. Having been staunch bears for much of 22, we think the consensus is wrong. We see a variety of reasons to be less bearish on risk assets in the first half. So let's talk about what you see so far. Do you like what you see so far?
So far, I think yes, but we've got to be honest and also say there has been some, some easing also on the bond side of things, right? So it's not just been cyclical strength, but it's also been strength on the bond side of things. So that has been taken pretty positively, I would say, by risk assets as well. That's part of the reason also why the Nasdaq was outperforming, why growth and tech stocks were outperforming. Now, I do think if we look at the consensus, right, I do think, look, we've got very pessimistic expectations. I think everyone is saying, look, earnings expectations are still too high. I don't disagree with that, but I disagree with the sequencing. I disagree with the timing, right? Because if we've got pretty much everyone agreeing that H1 is going to be tough, if we got, economists agreeing like they've never agreed before. Look at the Philadelphia Fed survey, right, on this recession probability. That's on like at the highest in 50 years. So we've got consensus agreeing on the probability of a recession, on the factors driving it, and on the timing. Now, what's the downside surprise then, right? What's the downside surprise to earnings? If you've seen in Q4 and now in Q1, those earnings revisions downwards, particularly in the cyclicals, in consumer discretionary, in materials, in the mega caps in IT and communication services. So exactly where we want to see them. What's the actual downside surprise? Now, I would argue, look, if we get an average recession, right, it's not going to blow anyone's boat, right? It's not going to be like, oh yeah, this is a massive surprise. This is why we need to get bearish now. No, not at all. Actually, what we need now is we need to get something properly going wrong, right? We need to have an accident, we need to have something break. Then you can be bearish.
You clearly thought it was upside risk. We've got a squeeze right now, that's clear. I'm trying to work out what are the durable tailwinds for this market. I get it. Everything you've said, a lot of people are on board with it. What's durable about what we're seeing?
I think it's still durable because sentiment and positioning is still so downbeat. I mean, let's not forget, we've just updated our sort of aggregate real money investor positioning study on Monday, and that still shows underweight positions on aggregate in equities and in high yield credit. That's normally not the case, right? That's historically been rarely the case that you see outright underweight positions. You see the same thing, right? If you look at CTA equity betas, they're still down. Yes, they've gone up a bit, but they're still, in level terms, still down. Look at equity betas of US equity funds, massively underweight. Multi-asset fund betas are sort of average. None of that is telling us, oh yeah, like everyone's already gone bullish. And if anything, when we talked to clients in the last sort of 2-3 weeks, the biggest pushback we got was, well, I know that everyone else is already bullish, therefore I have to continue to be bearish.
Right. Let's break this up, equities versus credit, and start with equities. Microsoft this morning, or rather after the close yesterday, how many messages did you get saying, look at Microsoft, you're wrong? What did you say back?
No, look, I mean, what I would say is it's not the time yet to go full on max overweight equities, right? With that, I agree. But that is mostly very, very tactical, because look at what's priced in for the Fed for the next 2 meetings. We've got less than 50 basis points priced into Fed funds now, cumulatively for the next 2 meetings. So they've just got to come out next week and say, look, we're going to go 25, but we'll do another to 25 in March, right? They're going to guide us towards that. And even that would already be a slightly hawkish surprise. And that would weigh on high multiple tech stocks and so on, right? It would weigh on valuations again. Perhaps a bit of a higher rates, well, but a bit of higher real rates, and that means then weighing on multiples in tech. So very tactically, I don't like equities, like, I'm not massively bullish on equities just yet. I would say in a muddling through scenario, right, where you say, look, it's going to be neither here or there, right? We're muddling through in terms of growth. Slow grind lower rather than really a swoosh down and the recovery in H2. That means that credit, high yield credit is fine, emerging market debt is fine, IG debt is fine, right? All of that, you just churn over the carry. That's fine.
Well, let's talk about emerging markets and let's talk about credit. Emerging markets, I think it was Morgan Stanley Investment Management yesterday. Get on board. They're not alone. That's quickly becoming consensus. EM International outperforms. Can we talk about domestic US credit? Triple C's. Citi came out yesterday, and I have to say it was a nuanced report, but the headline is buy triple C's. How much risk do you want to take in credit? Do you want to go right to the bottom of the quality stack and get into high yield, into triple C's?
Yeah, I think that does make sense to an extent, right? If we look at triple B's versus single A's, and we compare that against PMIs, there is actually much less weakness priced in. If you look at triple C's versus double B's, that looks much fairer priced relative to where macro indicators are. So there you could actually argue, well, the weakness is price, particularly if you compare it, right, within high yield. That weakness is pretty much in the price, so that's good, right? It'd be much worrying, I think, if we talk about the macro side of things as well. One of the pushbacks we got is, I remember we had our note down and you know, people said, but look at the ISM, look at the services ISM, the new orders, it's 45.
Who wants to buy credit with sub 50
How can you
PMIs?
turn more constructive now? My answer is very simple. I wouldn't turn constructive if it was still at 55 or 60, because then now leading indicators would still point down and we'd say, hey, we got another 10, 15 points lower. Be careful. Now you're at 45. I look at him like, well, this is exactly what I wanted to see. Done, right? Let's get on.
Max Kettner, you make it sound simple. It's not. We've got a challenging year ahead of HSBC. Max Kettner there of HSBC. TK, Max Kettner, bearish the whole of last year, comes into 23, gets constructive, and gets constructive fast.
Well, again, nice switch there. And again, it comes around to the earnings season, John, that we'll see. With Microsoft, it was fascinating, John, to see the lift yesterday, sigh of relief, and then a real question about cloud dynamics. Anurag Rana of Bloomberg was insistent they'll endure.
Wait for the guidance. Wait for the guidance. I heard that from Anurag Rana the whole of yesterday, Tom. We got the guidance and clearly a deceleration in growth. Tom, we've been piling into that growth story in cloud and Microsoft and elsewhere for a long time.
John,
now reality's starting to bite.
We need some guidance, John. When do you come home?
What on?
Are you coming home? We need some guidance.
I'm hoping perhaps over the weekend, maybe into Monday, but it depends. I'm enjoying this, Tom.
There, folks, is your forward guidance from John Farrow in London. Stay with us. Futures deteriorate. Negative 28. This is Bloomberg from London, from New York. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. and Germany will provide Ukraine with a significant upgrade in firepower to use against Russia. Now, Berlin has confirmed that it will initially supply the Ukrainians with 14 of its Leopard main battle tanks. The Biden administration is expected to announce as soon as today that it will offer Ukraine the M1 Abrams tank. In the UK, the government spending watchdog reportedly will cut forecasts for growth. According to The Times, the Office for Budget Responsibility told Chancellor Jeremy Hunt that it overestimated the prospects for medium-term growth. That will leave the government with a multi-billion-pound hole in its spending plan. Senate Majority Leader Chuck Schumer is telling Republicans, show us your plan. Schumer and other Democrats want the GOP to offer a proposal for raising the debt ceiling and avoiding a default. House Speaker Kevin McCarthy and other Republicans are demanding spending cuts in exchange for increasing the borrowing limit. A downbeat forecast for Microsoft. The software giant says revenue growth in its Azure cloud computing business will decelerate in the current period, and it warned of a further slowdown in corporate software sales. And shares in companies controlled by billionaire Gautam Adani are falling. Well-known U.S. activist investor Heidenberg Research said it was shorting the Empire stocks. Now, it accused the companies of brazen market manipulation and accounting fraud. Adani Group calls the Hindenburg report malicious and baseless. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. Trying to open
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg. Earnings season is here.
Big banks, that was the big story.
From the big banks to big tech.
Everybody is losing a lot of money.
It's a question of how high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number.
Blowing through estimates.
These guys are minting money.
With exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
Does this quickly become just a really crappy business model?
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
We always act together with our allies and friends. We are never going alone. We support the Ukraine as long as it is necessary with all the means we can use, but also always avoiding that this war is escalating to a war not between Russia, that this is going to be a war between Russia and the North Atlantic Treaty Organization.
The story in international relations in the last 24 hours, no doubt it's tank warfare or tank warfare to come of Germany, of the United States, maybe Britain leading the way. That's the German chancellor yesterday finessing the story with leopard spots on. There's another story right now for us to rip up the script as we do at Bloomberg Surveillance. And Lisa, this is really, really timely and important. Tyler Pager over at the Washington Post and our Simon Kennedy for Bloomberg advancing the story of what, I'm sorry, would be a shock and would be unconventional, which is a senior officer of the Fed moving over to 1600 Pennsylvania Avenue.
At a time where there's a lot of pivotal decision-making to happen at the Federal Reserve. So even if Lael Brainard, the Federal Reserve Vice Chair, is not the person who becomes the head of the White House's National Economic Council, replacing Brian Deese, even if she's not selected for that, it would be a significant interest for a lot of people to wonder what the relationship is between her and the Biden administration. This report saying that Brian Deese is leaving the position and that Lael Brainard is the front runner to become his replacement.
Buried in this, and the first name I thought of was the wonderful gentlelady from Rhode Island, Gina Raimondo, has made very clear within the Washington Post story she's not up for it as Commerce Secretary. She doesn't want the position. And, you know, we'll go to Anne Marie here in a moment, but you look at the list of people. I'm sorry, it's a political position. Nobody's worried about a PhD in economics.
This is the issue that I'm wondering about, what the liability is for Lael Brainard, even if she stays, right? I mean, let's say she isn't named the head of the White House's National Economic Council. Is there allegations of political interference with the Federal Reserve at a pivotal moment for them to make some decisions about how far to raise the rate, as well as what their balance of risks is at a time of a slowing economy?
Already perceived perhaps in the Democratic Party corner here by many on the other side of the aisle. A sophisticate on this is Anne Marie Horton, our chief Washington correspondent, and joins us this morning. Anne Marie, Principle One, what's the job Mr. Deese has right now?
Well, it's a really critical job, especially as the president is dealing with higher inflation and obviously as there's been a number of economic issues when you deal with gasoline prices, grocery bills, and also as they have this economic sanctions against Russia, which has created a number of blowback issues and supply chains following COVID. So it's a plethora of issues. It's also dealing with lawmakers on the Hill to make sure they can get some of their legislation passed through. And it's really connecting the dots between Treasury, their own economists at the White House, and throughout the entire administration. When you think of commerce, when you think of trade, when you think of Special Envoy John Kerry, this individual is really a part of all those conversations. We do know, the reporting has been, and people we've been speaking to, is that Brian Deese is leaving. No one is walking out the door before the State of the Union on February 7th, but they have been in search for his top job. But there has been no decision that's made. So a number of these names have also been pointed out to me, but I think we should make clear that there hasn't been a decision on who's going to be the National Economic Council director.
But Anne-Marie, how unconventional is it from a historical perspective for an administration to target a top Federal Reserve official for an existing political position at a time of such importance for that central bank?
So it sounds very unconventional, but at the same time, Biden has spent a lot of time with Lael Brainard, right? He thought of her potentially as being Treasury Secretary. He thought potentially of putting her in the #1 spot at the Fed, but then he decided to do a rollover and went with Jerome Powell. On monetary policy, she is voted in line with Jay Powell. The thing that really makes her stand out on the Fed is obviously how she feels about regulation. She's a lot more stricter on that front. How she feels about potentially how the Fed should look at the risks of climate change, how banks should look at the risks in the future about climate change. So these are things that differentiate her, but she's very much liked within the Democrat circles, and she was able to be confirmed by the Senate, and many would regard her in Washington, whether or not they like her politics. When it comes to economics, they think like Yellen, she's incredibly talented.
Anne-Marie, it sounds like you've drinking the political Kool-Aid here. Lisa, I really think you're onto something here. And that, I mean, the list of victims the Washington Post mentions with Simon Kennedy of Bloomberg is the usual names, including wonderful Gene Sperling, who I adore. I think Gene is great, whatever you think of his politics. For a redo as this advisor, come on, this is a demotion for Lael Brainard. Am I right?
I don't want to get into her potential in decision making, and Anne-Marie, you can discuss the demotion. But there's another element to this, and Anne-Marie, I'd love your insight into this. Lael Brainard has been on the margins dovish, right? I mean, yes, she's been voting in line, but she also has been raising issues about the balance of risks and this concern of over-tightening and killing economic momentum. How compromised is she politically? How much does she create a liability for the Federal Reserve at a time of such controversy heading into a downturn for this central bank?
I understand that there could be controversies with her name because now she's being discussed for a political job, and she is a #2 at what is seen as an apolitical job with the Fed. But I really do not think, I mean, she hasn't been picked yet, right? Like, I think if she was to be picked, that would, then these questions become a lot more important. But she hasn't just yet. And I think at this moment, yes, these names you're reading out, Wally Adeyemo, Gene Sperling, this would be his 3rd time doing that job. These are very political names, but I also think that there is a lot in her that Biden could feel like he could talk about her in a bipartisanship way because she is an economist.
Right now, we are misty-eyed folks, and with Aunt Anne-Marie, we welcome a new offspring to our Washington horde. We are pleased to mention the issuance of Edward Hayden Shirley.
Oh, yes.
All is healthy, all is wonderful. We do notice, Anne-Marie, that the child has an immediate bearing to the left in the, the incubator there, and we need to be understood that we are fair and balanced here. And I think Aunt Anne-Marie has to give some lessons here for our more balanced Edward Hayden.
I mean, he's very cute, and we have lots of congratulations here over to Matt and Brittany for welcoming this new little one. He's so cute. I can't wait for him to start booking guests.
Yeah, well, yeah, exactly. We'll see how that goes. I would say, what do you think? 6 months? Let's go. Anne-Marie, thank you.
Yeah, get him a Bloomberg terminal.
Well, we'll do that. We can work off the one in his crib. Anne-Marie, thank you so much. Really important news here. Lisa, I think you're really right here about the unusualness of this. I've never heard of this.
Well, especially at this moment, right? Because we've been talking about how the potential political quagmire comes later in the year when you start to get a question of, are we in a recession? Are we going to see the layoffs that just haven't come yet if the Fed is still hiking rates? And so, this creates a problem, especially, and I do want to say this, if she is chosen, How quickly are they going to create a replacement for her, considering the delay in 2021 at a time when inflation was accelerating? And a lot of people say that that was part of why the Fed didn't start hiking sooner.
Well, I guess it's as Marie says, nothing's been decided, and no one has certainly heard from the vice chairman as well. I would point out it is an eclectic group of names that the Washington Post has this morning. So I guess it's under, you think they got to get this done by the State of the Union, right?
Well, evidently, I mean, Anne Marie was saying that Brian Deese is going to be there through the State of the Union and then expected to leave. Yeah. But assuming that they're starting to get the gears going now, they'd have to really ramp up their search for who to replace Lael Brainerd if they did
choose her. He's shortlisted as the next hockey coach at Middlebury, I think, is where he's
I can guarantee that's not true.
As well. Futures negative 28. It is an important tape today in front of economic data, including a look back at Q4 GDP. I really want to emphasize a pullback in equities, yes, but far more a really interesting bond market, 4.15% on the 2-year yield. Yields have come in 6 basis points at the 2-year level. Thunderstruck at an inflation-adjusted 10-year, the real yield, 1.15%. Bonds on the move, speaking of economic slowdown. Stay with us from London and New York this morning. This is Bloomberg Surveillance.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
Bloomberg Surveillance, John Farrow in London. We'll go to him here in a moment. Lisa Abramowitz and myself in New York Earnings Central right now. As we look back, we look now, we look forward. AT&T right now, who cares? I mean, it's Ma Bell. Time used to stand still. You're too young to remember this. It's like, oh my God, Ma Bell. No, let's start with that. Nobody cares anymore.
Well, the big industrials, the big sort of classic utility companies, whether they're going to be more important at a time of perhaps more stability. What I find interesting, they missed marginally when it came to certain aspects of their earnings, basically a wash. But the investment that they're planning for next year, the CapEx, increasing more than people expected. How much do you start to see that? Motley picture. I'm going to stick with that kind of theme for this earnings season.
You know, we're going to have to see as well. And then Tesla this afternoon. I mean, it's not a small matter. Somehow TWTR, the former, will come up in a Tesla discussion.
Is Tesla a tech company? Is it a car company? How will it be valued? What will it be viewed as in terms of preceding what's to come, right? Is this a leading indicator for next week when we get some of the auto manufacturers, or is this a leading indicator for Amazon and Google and some of the other tech giants? I don't know exactly how it's being accounted for right now.
MoffettNathanson, you know them from their work in entertainment. Sterling and Billy over there just doing a great job on Microsoft. And they moments ago lowered their Microsoft target price. They tweak it down to 263 from a 268. That's the back and forth, if you will, we see in this nascent earnings season. Right now, on the greater economy, and particularly the European economy, with tanks being steered around, Neil Shearing joins us, writing exceptionally thoughtful notes for Capital Economics. Neil, good morning to you as well. We are coming up on a one-year anniversary of this war. What does year 2 look like, and what does year 2 of the war mean for Christine Lagarde?
Well, you're right. It's difficult to believe we're only a year in. It feels a lot longer, doesn't it? The key way that this is affecting Europe's economy, obviously, is through what's happening in terms of commodity prices, in particular gas prices. And really, the start of this year has been dominated by what's happening in China, rapid reopening there. We've had speeches from the Fed officials and others, and US inflation. What's crept under the radar, I think, is the fact that the European gas price has absolutely plummeted. Natural gas prices now a third of what they were almost 6 weeks. And so that, I think, is signalling the ECB's not out of the woods. Madame Lagarde's got more work to do, and her colleagues have got more work to do, but their job has suddenly got a lot easier.
Do they have the nominal GDP spirit, if you will, to act like the Federal Reserve of the United States? I don't buy it. I just don't. I'm not convinced the disparate nations of her European experiment had the oomph to prosecute a Jay Powell method.
I think that's right. There's clearly, there's many more seats around the table. There's many more competing views around the table. And of course, immediately a lower natural gas price helps the inflation picture because it clearly reduces the price of natural gas. But that feeds back into the economy by supporting real income. So the demand picture further ahead starts to look a bit better. All other things being equal, that means the central bank has to push back against that. So that's why I say I don't think they're out the woods yet, and coalescing and coordinating that policy response, I think, is going to get difficult.
Yeah, there's a lot of discussion about peak inflation, that perhaps the U.S. is past the peak and Europe is close to the peak. And then we got Australia overnight with inflation surpassing expectations and accelerating in the last 3 months of last year. Does that matter to you? Is that significant?
Well, it's significant insofar as what's happening in the Australian labour market, I think, is really interesting. It's a very tight labour market. So I think all along it's been obvious to most economists, at least looking at this, that the month-on-month gains in prices would start to ease. We're fixated on the year-on-year changes when we look at inflation, but it's the month-on-month that really matters. The base effects will get a lot more favourable as we head through this year. The year-on-year numbers will come down. What's happening in the labour market is key because that's what's driving wage pressures, and that's what really will affect wage inflation, price inflation 12, 18 months ahead. And that's why I think Australia is interesting. Very tight labour market, we're not seeing signs of kind of core pressures easing to the same extent there. That's what obviously the Fed will be concerned about, and the ECB will be concerned about too, happening in the US and the Eurozone.
That's where I wanted to go. This question of how do we get a sense of the labor market and whether that strength in terms of wage gains is continuing and has legs. Do you feel like that's the case, or do you think that people are right to say that even that is really cooling off?
Well, I think the first point to make is that irrespective of what happens in the labour market, I think core inflation in the US, certainly, possibly Europe too, is going to come down this year, just because core goods prices are coming down. Shelter is going to come down in the US too. The labour market's important for 24 and beyond. Actually, some of the indicators we're following, there's signs of hope. It looks like the labour market started to loosen a little. The quits rate's a key indicator. That ticked up a bit in the last month, but has generally been on a downward trend. So I think there are some encouraging signs there, but you've got to dig pretty deep at the moment.
Neil, Capital Economics does some very thoughtful stuff. I'm going to call it more up at 40,000, or dare I say 60,000 feet. On a broad sense, it's been a pandemic recovery, a supply-side dynamic within monetary guessing, monetary theory, if you will. And we're supposed to shift back to something we knew, or maybe move on to something original. Where are we right now in that movement from a pandemic-adjusted economy over to something quote-unquote normal?
I think there's two things happening here. The first is how does the pandemic fueled inflation surge play out? Can central banks get on top of it? Do we get back to something approximating the kind of Goldilocks era of 2% inflation, perhaps 3% nominal rates, real rates at the kind of 1% level, a bit lower? The economy that we were used to before. Yeah. I think probably we do get something like that, but like I say, central banks have got to really squeeze this inflation out of the system a bit further. The second, I think that the more tectonic shift is what's happening at a geopolitical level. The pandemic and events following the pandemic have masked this, but the splintering, the fracturing in the relationship between the US and China, that I think is deepening in many profound ways. We've got a flavour of that at this month Davos meeting. The IMF started to talk about it. That I think is going to shape the global economy over the next decade or so. It's a big story.
You know, what's the big story here? And we're going to have a dearth of Fed speak, Neil Shearing, right now as we move to the February 1 meeting. They're in the quiet phase, so we're going to use you as our Fed speaker today. But the basic idea here is we've got to find economic growth, and that can be real GDP that somehow migrates back to a 3% run rate. Very few people are looking for that. Or a nominal GDP growth, which is all messed up with the current and present inflation. Do we go back to the great moderation, which everybody suggested was too subdued except for the haves? It was the only ones that were advantaged by it were the elite class.
Yes, I mean that question. I think there's two parts to, isn't there? There's to what extent is the pie growing, and at what rate, and then how do you share that pie? Now, I think on the real side, on the real GDP side, I think it probably is likely that potential GDP growth in most advanced economies, I don't think it's really shifted. I don't think the dial on that has shifted. It's probably 1-ish in the UK. We're affected by labour supply problems here. It's higher in the US, but not much, kind of 1.5 to 2 maybe at a stretch. And then there's the inflation story. And as I say, I think the maximum danger on inflation was perhaps 18 months ago when the Fed was talking about it being transitory. We were still talking about flexible average inflation targeting. Central banks were going a bit soft on inflation. Such has been the surge over the past 12 months that I think that argument has died a death. It's gone away. Central banks have been made aware of the primacy of their inflation targets, reminded of the pain they have to impart if the inflation genie gets out of the bottle. So that's why I feel a bit more confident about inflation at a kind of 2.5 rates kind of further ahead.
Neil, before we let you go, you're talking a lot about the shift in narrative, and the narrative has swung wildly in the first 3 weeks of this year. We're heading into last year. It was Europe heading into recession, the U.S. faring a bit better, but it's going to be a rough first half. Now, all of a sudden, it's Europe is actually doing really well, and they're out of the woods. China's coming back online. It's going to fuel all sorts of growth. Has that narrative gotten ahead of itself?
I think it has, and I think expectations and starting points are the key point here. I mean, interestingly, in the US, you look at the data, it's fallen off a cliff. Some of the survey data yesterday was a bit better, but the leading economic indicators are falling sharply. In the Eurozone, it's improving, but from a much lower level. So I think some of this is just the fact that we came into the year with expectations in Europe particularly low and perhaps a bit too optimistic in the US, and we've had some normalization and adjustment. It's not necessarily that the US is underperforming Europe or Europe overperforming the US.
What's your China number here, real GDP, 12 months forward?
This year, and we have our own way of measuring China's GDP. We think it's about 5% this year on our own measure. There's going to be quite a rapid reopening and bounce, I think, in Q1, Q2, but then tapering, slowing quite sharply over the second half and back end of this year as those old problems come back.
Neil Sharon Lengthy, thank you so much. Greatly appreciate it with Capital Economics now. And look to his notes at Capital Economics. Really thoughtful stuff about, and I guess, Lisa, the way to put it is these three economic systems bouncing off each other. And I think of Bill Rhodes and central banker to the world. I'm not sure if Jerome Powell's, if he can be central banker to the world with the war in Ukraine and with a pandemic. And perhaps in the Pacific Rim.
Well, it's a complicated world, and I'm glad that you mentioned the war in Ukraine because it does grind on, and we did just get this headline that the first German Leopard tanks are going to be deployed in Ukraine in 3 months, and this follows a lot of controversy in Germany about whether or not to join with the U.S. to send tanks over to Ukraine to protect the nation against Russia. I do